can you hear me clear? Welcome everyone to the virtual FIMMAC 2021. We're excited to have you with us today. We've got a lot in store for you. Not only do we have our webinars, but we also have areas for you to play games, win prizes, speak to exhibitors, and much more. Come on, let's see what we have in store. Welcome to the lobby, the main hub of the event. You can navigate to the different parts of the event here by using our navigational panel. These tabs help you move around easily, and these will be available throughout the event. Ready to watch the live stream? Just click on the conference hall. Feel free to interact with the speakers by asking questions, offering your commentary, and more. Ready to check out the exhibitors? Click here. Find out more about the exhibitors and their company details when you click here. If you want to speak to them, you can use the chat or video call feature. Want to know what sessions are coming up? Check out the agenda here. See a session you're interested in? Go ahead and add it to the My Schedule page and build your own personalized itinerary here. Don't worry about missing out. This page will display the sessions you'd like to attend, as well as scheduled meetings. Speaking of meetings, you can also set up meetings and network during the event. It's super easy on the platform. All you have to do is check out the list of participants and view who's open to networking and their interests. Schedule meetings with your peers and even swap business cards. You can even do this with exhibitors too. Receive something from an exhibitor or a contact? Go ahead and view all your documents in the My Briefcase tab. You can even export them to your device. Ready to win big? We've got several games and activities for you. Watch the Champions League and see the pros go head-to-head. Or if you've been watching the live streams, stay tuned to try your hand at the pop quizzes. Or if you're feeling lucky, try out our Lucky Draw quiz and stand a chance to win amazing prizes. If you need help, you can always click on the Help Desk tab. To keep up to date on the latest announcements happening at the event, do keep a lookout for the Announcement tab. And that's our walkthrough. Now you have to navigate the event. We hope you have a great time at FIMMAC 2021. We want to hear your voice. Don't forget to send in your responses to our survey. Your feedback makes the FIMMAC events a success. Head over to the survey tab and let us know your thoughts.
Good morning, everyone, and welcome to FIMM Annual Convention, better known as FIMMAC 2021. FIMMAC is FIMM's flagship event where Unit Trust Scheme or UTS and Private Retirement Scheme PRS consultants, members of the investment management industry and the public come together to share, learn, and perhaps debate some of the critical, impactful topics of the day across the fund management industry. Of course, we're looking at this event over 5 days. We're going to be doing this virtually. This year's FIMMAC theme is called The Next Normal. Not just the new normal, but the next normal. And of course, the findings towards the end of this 5-day session is trying to identify FIMM's 2021 Investment Management Survey, which highlights the industry's experience and the industry's learnings over the pandemic period, and now how to deal with the endemicity aspect of things, particularly when many of the places in the country has moved into stage 4 of the National Recovery Plan. The idea here is, of course, to split this into kind of a 2-segment session. The first 2 days will be focusing more of trade industry specialists, consultants such as yourselves, and we're going to be debating some of the key issues pertinent to the consultants per se. And then the following 3 weeks, starting from Wednesday until Friday, we're going to be debating with the public and sharing some of the ideas that we can think about, particularly when it comes to the ideas of investing and investment for the general public's consumption. That's how we're going to be splitting across the 2 days. Towards the end of each and every single day, we're going to be having some sort of pop quiz where you stand a chance to win a lot of fancy prizes. My colleague Hannah will go through with you at the end of that day. For today, for instance, it's going to be happening at 12:30. Remember to keep this event continuously engaging. There's going to be a lot of opportunities for you to ask your questions directly to the panelists. Just use the Q&A button on your screen to start to ask the questions to them. For instance, in the first session, I'll be moderating a panel between Datuk Teng Chi Wai of Afin Wang Asset Management, as well as Soturu Yamadera of ADB. So there's a lot of questions, opportunities for you to ask the questions then as well. Later on as well, you can ask all these other questions. You have to also remember that this is HRDF claimable, so think about the ability for you to register there as well. Without much further ado, allow me to invite Encik Rizal Sharif, the chairman of FIMM, to deliver the welcoming remarks. That's going to happen right now.
Bismillahirrahmanirrahim. Assalamualaikum and good morning to all. Yang berbahagia Datuk Syed Zaid Alba, Securities Commission Malaysia Chairman, my fellow FIMM board members, distinguished speakers and moderators, industry leaders and stakeholders, members of FIMM and distributors, unit trusts, companies and PRS consultants, investment industry professionals. Ladies and gentlemen, welcome to Virtual FIMMAC 2021. On behalf of the team at FIMM, I would like to thank everyone for joining us at our inaugural Virtual FIMM Annual Convention, or better known as FIMMAC. It's been a long but fulfilling journey in FIMM's history. For the first time, FIMMAC is hosting a virtual conference. As some of you would know, FIMMAC is FIMM's flagship event and is usually done physically. It is an event where unit trust scheme and private retirement scheme consultants, members of the investment management industry and the public come together to share, learn and discuss impactful topics across the entire fund management industry. Our plans were ready to organize FIMMAC in 2020, but then we were hit by the pandemic. As much as we wanted to bring the fund management industry together, we had to postpone for everyone's safety. That brings us to 2021, where we have adapted to the new normal and accelerated digitalization. The pandemic has forced the world and our industry to accept, accelerate, and adapt to live in a new normal that gets newer every day. As the shift towards recovery mode intensifies, business and people are now looking at the next normal. With that, we are proud to present to you the virtual FIMMAC 2021 themed The Next Normal. This year's focus is on the key findings identified by FIMM's 2021 Investment Management Survey, which highlights the industry's experience then and now and the expectations of what is to come. The survey's objective is to share with industry practitioners, consultants, as well as the investing public on how the unit trust schemes and private retirement schemes have navigated through the pandemic and how they will remain relevant and resilient in the future. As the survey's findings form the premise of this event's discussion, I would like to offer a prelude to what is in store for this entire week. Based on feedback from the participating members and distributors, both internal and external factors pose great risks to the respondents' organizational growth. However, in dealing with COVID-19, the industry was more concerned with internal factors than external factors. Consequently, internal factors were the drivers for the overall growth compared to external factors, and these factors will continue to drive the industry's growth and retain its resilience in 2021. Therefore, areas of focus in 2021 to achieve sustainable fund performance and economic growth, accelerate growth, technology, and enhance customers' experience. The most likely composition of asset allocation in the next 12 months, traditional mainstream assets such as fixed income and mixed asset classes. To broaden portfolio allocation in the overseas markets. And 3, develop new investment product services. The sessions today and tomorrow will discuss further on these topics. Today's session will focus on the theme of transitioning into and during the new normal. Tomorrow, the speakers will explain how things are shifting into the next normal. Ladies and gentlemen, for this year's FIMMAC, we have over 2,000 registered participants, where a total of about 1,100 are industry practitioners from 61 companies. I would like to take this opportunity to thank you for your active participation. I am pleased to also share with you that this year's FIMMAC 2021, we are introducing the Industry Education Series from the 27th to the 29th of October, which is open to the public, making up for the remaining 900 registered participants. This is where university and secondary school students, retirees, and potential investors will get to learn about investing, saving for their future, and how to protect their investments. This session is also open to consultants and industry practitioners. The following themes will be covered over the next 3 days: investment planning, investor protection, the do's and don'ts of what to look out for when you are investing. Ladies and gentlemen, 2020 has been an extraordinary year with challenges unheard of and unprecedented in our lifetime. COVID-19 continues to dominate the attention of governments, companies, and ordinary people throughout the world. Nonetheless, FIMM and the Malaysian funds industry have shown remarkable resilience in the face of adversity. Whilst investment sentiments were severely affected in the initial shock of global lockdown, the markets gradually recovered, albeit with caution as seen in its volatility. The unit trust industry grew, a testament to Malaysian investors understanding the value of investing for long-term financial security. There is always a silver lining in every crisis. To my mind, this pandemic has forced FIMM to transform into a technology-centric company in its various internal and external activities. A technology-centric FIMM was always a topic for discussion. Some initiatives were introduced and others were re-strategized. Like many other organizations, we moved to transform, but it was never urgent. A crisis forces transformation, and I'm happy to share that FIMM has overcome those challenges. The members and stakeholders of FIMM have made and continue to make significant contributions for the betterment of industry. Now we embark on a new chapter of this journey. As the advent of COVID-19 has changed industry norms and practices, FIMM will need the members' continued insight and support to adapt the industry towards changes forced upon us by new circumstances. This is where I must express our thanks to members for your efforts and urge you to continue your active participation in the various initiatives and projects conducted by FIMM. More than ever, we need clear channels of communications between FIMM and its members. We will continue to push the envelope and strive for improvement to ensure we meet our objectives as an advocate for the development and industry and growth of this industry. With that, I would like to end by once again thanking everyone here today for taking some time to join us at Virtual FIMMAC 2021. I'm confident that you will benefit from this convention and leverage from the insights shared by subject matter experts lined up for this convention. I do hope when the situation permits, we will get the opportunity to hold FIMMAC in the usual mode. Till then, take care, stay safe, and I look forward to seeing you next year. Wassalam. Thank you very much, everyone.
Encik Muhammad Rizal bin Muhammad Sharif, Chairman of FIMM, FIMM board members and senior management, ladies and gentlemen, Assalamu alaikum and a very good morning to all. First and foremost, I'd like to thank FIMM for the gracious invitation to deliver this year's keynote address. The past 18 months has without doubt been one of the most severe tests for the global capital market, with many countries largely unprepared for a global health crisis. Despite the challenges, our unit trust and fund management industry continued to play a vital role in providing savings, intermediation, and liquidity for the Malaysian capital market. In particular, total asset under management, or AUM, continued to show strong growth momentum, increasing by 10% in 2020. As of August this year, it had risen by 7% to around 970 billion ringgit. This is testament to the resilience and agility of market players, as well as their ability to serve everyday investors. In recent years, Malaysians have demanded more diversified investment offerings as investors rebalance their short-term objectives and long-term investment goals. Encouragingly, there has been 133 new fund launches of various types since 2019 as industry responded to these varied needs. However, it is essential that market intermediaries continue to grow and remain competitive in the face of a rapidly evolving market landscape. The SC recently rolled out its 5-year Capital Market Master Plan 3. The CMP3 intends to ensure that Malaysia's capital market stays ahead of the curve and to be relevant, efficient, and diversified, so that it can continue to benefit each and every one of us. To be precise, within the context of the fund management industry, I would like to focus on 3 next normal themes in the CMP3. Acceleration of the Sustainable and Responsible Investment, or SRI, broadening of retirement and onshore investment options, as well as greater market digitization. Today, there is a rising awareness and renewed focus on sustainability and climate change, given its severe impact to global economies. The pandemic, if anything, has exposed the fragility of our modern world. Greater commitment to sustainability and the climate agenda have further spurred demand for sustainable investments. Global sustainable fund assets grew 12% quarter on quarter to $2.3 trillion in the second quarter of 2021. In addition, ESG funds globally have tripled over the past 10 years to almost 4,000 funds. Similar trends were observed in Malaysia. Since 2020, the number of qualified SRL funds introduced domestically has increased more than threefold. SRI allows investors to make ESG-aligned investments while generating positive financial returns. Furthermore, in recent episodes of heightened volatility, market appeared to have rewarded strong ESG performers. Global sustainable funds also demonstrated better resilience with smaller losses compared to conventional funds. This has increased the attractiveness of SRI funds to investors. Sustainability is not new to the Malaysian capital market. The SC has long recognized the importance of SRI given its commonalities with Islamic investing. Over the last decade, we have introduced various SRI initiatives, including SRI Roadmap in 2019 to strengthen Malaysia's position as a regional SRI center. The CMP3 identifies SRI as a key development thrust given its importance in shaping a stakeholder economy that facilitates long-term value creation beyond short-term profits. The SC will also continue facilitating capital raising by sustainable and responsible businesses that benefit a wider set of stakeholders. Accelerating development of SRI in Malaysia requires a collective effort of all stakeholders. We seek the industry's cooperation in leveraging increased awareness of sustainability by providing more investment opportunities for investors. Moving forward, this calls for market players to enhance their SRI intermediation capacity and capabilities to innovate and meet market demand. An emerging area of concern is our future retirement savings. Prior to the pandemic, retirement security was already a challenge for Malaysians. The pandemic has made matters worse. For example, EPF recently revealed that the median savings of its B40 and M40 members fell by 60% and 17% respectively. In the first 8 months of this year alone, withdrawals have exceeded contributions by almost 85%. Now, about half of all EPF members under the age of 55 have less than 10,000 ringgit in their accounts. Given that Malaysia is rapidly approaching the status of an aging nation, this issue will only grow more pressing over time. Therefore, in line with national policy efforts, the CMP3 seeks to facilitate innovative solutions driven by the private sector to provide investors with more retirement saving options. In tandem, we also need to increase our investor education efforts to emphasize the importance of retirement planning and address retirement planning inertia by the younger generation. To enhance access and drive a regular savings culture, the SC will work with the industry on a new framework for portfolio-based private retirement schemes or PRS. This will facilitate convenient interfaces via smartphone and other such devices. It also promises cost efficiencies and seamless onboarding with algorithm-driven solutions that meet retirement goals. As a result, savings can be channeled more easily in smaller and regular amounts to address financial constraints of younger investors. Other solutions considered within the PRS framework is to allow for target date funds. Such funds provide a more optimal de-risking process for investors as they age. The portfolio will rebalance automatically according to the investor's age, target retirement date, as well as market conditions during the tenure of the fund. Another key priority is providing investors with choices in terms of access to foreign funds and alternative strategies while ensuring a level playing field for domestic and foreign fund managers. This necessitates the introduction of a dedicated framework to recognize foreign exempt schemes. We are adopting a phased liberalization approach to allow locally incorporated fund managers to offer foreign funds to institutional investors and high net worth entities. Permitting foreign funds would allow domestic intermediaries to better serve sophisticated investors and bridge the gap in product offerings. This move is expected to help the Malaysian asset management industry compete. On the domestic front, we are revising the SC's guidelines on unit trust funds. The revised guidelines will bridge the gap between domestic and international fund requirements in other markets. This will make domestic funds more appealing to both domestic and foreign investors and help the unit trust industry to grow. Revisions include broadening the definition of permissible investments and eligible markets for domestic funds to invest in, liberalizing of investment strategies and asset classes, expanding the scope of securities lending, and allowing repurchase transactions to include foreign markets. We are optimistic that these revisions to the guidelines would not only allow domestic funds to establish a global presence, but also portray Malaysia as an attractive investment hub. Ladies and gentlemen, another hot topic of conversation today is digital adoption and greater use of online tools. Intensifying the push for or towards end-to-end digital integration, we do not have to look far. For example, today I am speaking to you through a virtual platform which can accommodate significantly more people than a physical meeting venue. Also noticeable during this pandemic is how consumer behavior has changed, with many embracing or forced to embrace this trend. This has significant implications for your interaction with your customers moving forward. As such, I urge industry members to leverage and harness the benefits of the Fund Management Industry Digitization Group, or FMDG, which aims to accelerate the digitization of the fund management industry. Related FMDG initiatives to explore include the feasibility of having a centralized infrastructure to increase efficiencies and enable greater growth of cross-border fund distribution. It would be most encouraging to see more industry-led recommendations and initiatives arising from this platform as we collectively implement the CMP3's plans moving forward. Ladies and gentlemen, in closing, I would like to highlight that the CMP3 is a shared journey to be undertaken. We can all plan for the next normal. However, the best laid plans would remain nothing more than words and aspirations on paper without concrete action and collaboration from all stakeholders. And on that note, let me once again express my appreciation to FIMM and everyone present here today. I wish you an interesting and fruitful conference ahead. Thank you.
Welcome back to FIMMAC 2021, the next normal. But before we talk about the next normal, our first session will be talking about the new normal. Everything is rather normal these days. In this panel, we'll be trying to unearth the conversation of what were the challenges that the industries faced, but more importantly, what were the lessons that were involved, and how do we move forward from this? So here to unpack this, I have a rather illustrious panel joining me. Tomo-san or Satoru Yamadera, the advisor at the Economic Research and Regional Cooperation Development at the Asian Development Bank, as well as Dr. Teng Chi Wai, the MD or Managing Director at FIMMAC Asset Management. Tomo-san, maybe we can start with some opening remarks by you.
Okay, thank you, Ibrahim. Thank you very much for giving me this opportunity to speak on this not easy question, what would happen under the new normal. I'm Satoru Yamadera. Actually, my focus at the ADB, I'm supporting the ASEAN Plus 3 capital market developments, financial market developments. So today's sort of a discussion, I'd like to focus on something clear what has changed and something which is not or will not change. So, so 2 points, maybe we can expand the discussion. So the next slide, please. Next slide, please. Yes. So I'm not the fortune teller, or I don't have a crystal ball to tell the future. But I think we can look at the things, what happened during the pandemic, and we may be able to predict the future during what has happened in this pandemic. And the notable phenomena is actually sort of a so-called digitalization or online environment. And this chart is from ITU, International Telecom Union, and this is a kind of data usage. What is striking is actually the big shift of the data usage in Asia. Of course, other regions also see the increase, but comparing to the other region, it is quite notable. The Asian Pacific, and obviously this is Asia, we see a huge jump in the data usage. And we also need to be sort of noted or mindful. We never go back in the previous level. So which means, this jump and shift will continue. And this means that everybody's daily life will be more online, and we will use the further usage. And this is, I think, a quite important fact, what happened during the COVID. And from ADB's point of view, of course, we will support the recovery. But we are not claiming going back to the previous normal, no. We always mention we need to build back better. So the whatever the things that we're going to be normal is going to be better than the previous. In what sense? In terms of use of technology, hopefully that would affect the people's living life and quality, and also in terms of sustainability of economic activities, we hope to be able to improve the situation. That means what we mean by build back better. And we understand that actually the COVID-19, the positive side of COVID is the acceleration of the technology, digital transformation. People now get used to the use of e-payments. Previously, in Asia, in many countries, we see the use of cash. But I think because of the sort of food delivery or transportation. Now we see further use of digital payments everywhere, not only in Malaysia, but also Indonesia, Philippines, and other. So this is quite important fact that we need to understand. And new normal very much depends on the technology and IT infrastructure. Actually, during the COVID, the country which spent high investment on IT and higher IT infrastructure suffered less comparing to the average. And that is quite understandable because every people's life moved to online. So the countries which have good IT infrastructure could survive, or at least ease the pain of lockdown and also other negative side of COVID. And this situation will continue. So this is kind of a new phenomena we noticed during the COVID. Next slide, please. So as I said, the technology use of digital is the big change. But also, there is a thing that we don't see any change, or we won't be able to see the change. And so that is the aging. Asian countries, this COVID, we see so many fatalities, but in total, we also see less death from other causes. So overall picture of demography hasn't changed much. So it is important to understand. The population is one of, or demography is one of statistics which we can predict easily, and we need to understand this. The trend of aging will continue, and that really put the pressure on Asian economies for next 20, 30, 50 years. And the right-hand side shows how technology can enhance the economic activities even under the aged society. It is important to understand that aging is not a bad thing. We may be able to mature our knowledge. Of course, physically, we may not be able to work like young generation, but technology may be able to substitute those labors. Also, we may be able to translate those knowledge and technologies into software, and that may increase the labor productivity. Of course, technology can help education, not the younger generation, but also the older generations. And the technology can improve the matching the workers. Of course, there is always some demand for old people. So old people may need to continue to work, and retirement age may be extended. And those matching will be supported by the technology. And of course, the technology will help extend the life expectancy. And because of this COVID, I think online diagnostics and also you don't need to go to hospital or even remote area. They may be able to receive some high medical treatment through online technology. So these are the things. So the COVID really accelerated the transformation. And the big challenge for us is how this technological shift can help mitigate the impact of aging. This theme is, we've been discussing this aging issue for 10 years. And but it's not easy to change things. But thanks to technology, maybe we can accelerate to meet the challenge. So these may be also quite important point that the asset management industry need to consider. So these are the points to consider what would happen in the new normal. So I hope we can have a good discussion. So let me end my short presentation at this point. Thank you.
Thank you, Tomo-san. Before we jump into Dato' Teng's presentation, there are some conversations that needs to be had. I had a very interesting article that I read very recently that talks about the aging economy or the silver economy on the sunrise. And in it, it argues that digital adoption amongst silver economy players, I'm trying to use polite words here, I'm not trying to say senior citizens, let's just call it silver economy participants. The adoption is on the rise across Asia. Big e-commerce companies like JD.com, like Shopee, like Lazada see an increase in adoption of e-commerce. Folks are staying at work a little bit longer, even if it is a change of their designation, a change of their role. We're looking at the senior citizens looking for longer term investment products. It's no longer a 60-year-old kind of cash out. It's more like 70 years old, or even longer than that, even 80 years old. Do you feel that the new normal or the next normal is going to be more solutions going to be provided for senior citizens across Asia?
Yeah, I very much agree. And actually, I'm currently evacuating in Japan from Manila. Well, I'm working from Japan right now. Well, as you know, Japan is very much aged society. And now, I mean, if you walk in the street, you see more old people than the young children. So it's not the future. Age in Japan is a kind of ongoing fact. Well, to me, technology is really changing the behavior of elder people in Japan. People sometimes say that the elder people may not be able to adapt to those technologies, but yes and no. And I would say that the technology can accommodate. Well, my father cannot do the typing, but he can use the kind of a voice recognition. And so he sent me the email via voice message and also, translate into the word. So the technology is also significantly, rapidly catching up, and that would help a lot. But also, I would like to emphasize that the technology cannot overtake the human being. Some factories in Japan, sometimes the very tiny piece of parts needs to be crafted by the very well experienced craftsman. Because he can sense the micro nanometers. But actually, unfortunately, at this point, the machine cannot do so. And like the parts for rockets or something very special needs to be still handcrafted, handmade. And experience is extremely important. So again, no need to fear. Of course, there are some change of the job and transformation, but there is always some demand for the human being, and I hope that the Japan can show some leading example in that area. And so people in Asia can feel more safer to transform to the new aged generation. But the one big concern is Japan is lucky in the sense that the wealth of accumulation is far much higher than the rest of Asia. The China now is the biggest in Asia, but per capita wealth accumulation is far much less. And the big question is how that would impact social security funds, pensions, public pensions. Unfortunately, those are not enough. This is really, I would say, the concern that Asian well-experienced generation can live longer with without any concern. That will be, I think, a challenge.
We'll put a pin on the silver economy for the time being and move to a certified millennial right now, Dato' Teng Chi Wai. Dato' Teng, please proceed with your presentation.
Good morning, Sunny. Good morning, Tomo-san, and good morning to all who are listening in. Let me move straight to my next slide, slide number 1, to give you some thoughts that I have on this particular topic about living in the new normal. But I'm going to speak from a local perspective. I think Tomo-san has given us a very good overview on the perspective of Asia and global in how the world would shift as we go forward from here. But let me just take you back one step. During the pandemic that we had in 2021, I think one of the industry that has shown a very resilient environment is really the business that we are in, the asset management business. It has grown rapidly over this period of time. We have seen a big increase in the number of accounts for investors who are below 35, partly because of the development of the private retirement scheme in Malaysia. And overall, if you have been a consultant to the business, you have also experienced a heightened increase in business over that period of time, and there was a spill over into the early part of this year. And if you ask me why, I've been asked constantly by people, why is this phenomenon in the asset management industry? Where it has actually took a big leap forward during the pandemic. And I guess the answer, there are various answers to it. There's no one single answer. I guess the key answer is really Malaysia experienced a phenomenally low interest rates into this pandemic. We never had interest rate at this level of 1.75%. The last, even during the crisis of 1998, if I'm not mistaken, interest rates barely stayed below 4%, too far from 4% level. So this phenomenon has actually driven a lot of savings into the mutual fund industries, and a lot of you have benefited in the process of being able to give advice to your clients of how to redeploy their savings. I think the other point I like to make from this slide is really into the new normal. Interest rates will continue to stay low over the next 2 years, 1 or 2 years or so, and there will continue to be a hunger and thirst for alternative. And I think that's probably where the opportunities lies for the industry. The other point I'd like to make is really on aging. Malaysia, like other countries, are also aging over time. Over the next 20, 30 years, you will see that phenomenon taking place. And there's a lot of savings in Malaysia. And a lot of them means that there are opportunities for the industry to continue to grow if you can provide suitable solutions to the aging population. The next slide, please. The other point I'd like to make is about the digital push by the industry. I think one of the good things, or one of the positive effects from the pandemic has been a push by the industry players to go digital. It accelerated the process, right? I've been in this business for over 20 years, and I've not seen how fast adoption of technology has taken place in the industry. I think in the last year or so, either as a company we push digital forward and get a greater adoption firm-wide. Otherwise, you can't do business at all because everyone is locked down at home. But that's only the front end, right? We're seeing a great push at the front end by the industry players to adopt technology, and I think the industry has come through very strongly. That despite most of us were only having 20-30% staff in office during the height of the pandemic, business have not been affected in the way that people can still transact mutual funds online. I think that's something that the industry has moved forward very well. But when you talk about digitalization, there are various aspects of digitalization, right? There is the front end itself and there's a back end itself. I think at the front end, I think there's still a lot to be done, especially in the area of AMLA, KYC, for the industry to move forward to have a lot more automation in that particular area. In the back end, straight-through processing has continued to take place. However, in the area of investments, I do see a shift eventually. I mean, the constant question that we keep asking is that can robots replace fund managers in this industry? Okay? And I think that's something for the industry to think through, and how we can use machines to supplement what we can offer to the local industry. The last slide I like to talk about into the new normal, into what I observe going forward. The last slide, please, is this. I think I've seen one of the great adoption of digital assets by young people in the last 18 months or so. I was told Luno platform, the one that people trade bitcoins and whatnot through it, has actually garnered about R1 billion of assets within the last 12 months in operating in Malaysia. That shows you how fast adoption is like. Of course, it makes it easier when prices of bitcoins are rising. But the fact is that the young people of today are willing to try new stuff, new assets, things that the older ones will not be able, probably will not even try to figure out how to get it done. My point to you is this. As a consultant to the industry, I've been asked, will the industry change into the new normal? I guess in the short term, no, because I think our investors base still prefer a fair bit of advice, a fair bit of face-to-face meeting and direct interaction. However, I'm here to say in 20 years from now, I think we're going to see a shift in behavior. But the young people who are transacting into the digital age and digital assets, these are all in their 20s and 30s. Give it 20 years from now, they will be in their 50s. And they're used to transact on digital platforms. They may not enjoy, they may not request or ask for face-to-face servicing. Number two, a fair bit of these investors will then are used to volatility, and they may have very short-term horizon in their perspective on investments. And that's probably for the industry to think about. How do you address this segment of the marketplace as the market will change in the next 20 years? Those are my comments, really. And I'll pass you back to Ibrahim, and I'm happy to have a greater discussion on some of these thoughts I have into the new normal. Thank you very much.
Thank you, Dato' Tang. You know, it seems like the silver economy theme has been re-emerging for quite a bit. But with the expectation that low interest rate is going to last for quite a bit, and we know that right now fund managers or investment managers are having a lot of products, sometimes too many products in the market right now. Do you think that the opportunity, and this question is for Dato' Tang, do you feel that this is an opportunity for service providers such as yourself and your competitors to streamline the products, to make it simpler, to make it longer in terms of tenure for those that want to seek, you know, retirement later on in their careers, maybe 70 years old or even 80? Is that an opportunity for us to rethink on how we deliver products to the silver economy?
It's an interesting question, Ibrahim. I mean, there are people who say that we have not enough choices in Malaysia. There are those who say that we have just too many products in Malaysia. I guess there's no straight answer to that, because to each is their own. My view is that we continue to try to educate the market that the way to invest is really not to invest just by one fund. Chase the latest and hottest market like China 2 years ago. Today, may want to chase the internet stocks, the technology stocks, or chase US market because it's doing so well relative to the Asian markets or emerging markets. I think the way to invest, in my view, really for the industry to move forward, that's my perspective. Right? I mean, my colleagues in the industry may not fully agree, but that's my perspective. Is really the way to invest is really to look from individual asset allocation perspective. And the way to invest is really have a diversification of your investments across different asset classes, across different jurisdictions. That's the way to invest. And I think that you cannot run away from the fact that the markets will be volatile, the environments will continue to be challenging. But in order to overcome that, it's not to really chase the markets. It's really about allocating well so that you can sleep well over time. However, as I said to you, the young generation of today We invest in Bitcoin when they sleep, and the next morning when they wake up, Bitcoin is up 10% from 60,000 to 66,000. And when you tell them invest over 3 years, they say that's too long a time horizon. I think that's probably the challenge of the industry over the next 10, 15 years, how to convince a new breed of investors who are so used to being short-term to think beyond 2 months or 3 months. I think that's the challenge of the industry.
There's an article that I read last night, which is talking about Wall Street putting together an ETF with coins, Bitcoin, Ethereum, you name it, and then marketing it as a safe product because it's a diversified product. The first thing that came to my mind is, I mean, they got the diversification there, but I don't know whether the volatility is being addressed. But it seems like the demand by the market, at least in the US, is there. So, you know, if the consumers want it, I mean, you know, what happened to customers always right? I myself would not, and I'm a young guy, right? I mean, I assume I am young compared to other people here. But it's like, even I am very nervous about that whole situation, right? And then you can mask it with ETF and all that, but the underlying asset is still price volatility. So, you know, it's not about the biological age, it's the psychological age as well. So I'm okay with unit trust growing at very low interest rates as long as it's safe. Yeah, so how do we match these two wants, right? The psychological age, the market age, the biological age with the products that is being offered in the market? Maybe Tomo-san or Dr. Tang, either one?
Well, you are asking me a very difficult question because I've been in the public sector for years. Yeah, before joining ADB, I was at the BOJ. So from a regulator's perspective, so in a sense that my view may be conservative. Well, I guess also another point I would like to highlight, and particularly I noticed, and in a sense, as I mentioned, I came back to Japan due to COVID, and I'm working from Japan. And but taking this opportunity, I'm also trying to expand my network, and I've been meeting with a lot of so-called millionaires, generation which succeeded in investments. And what I've noticed is they are quite independent. They analyze company like analysts. They are really the fund managers. Or sometimes when I discuss with them, I feel that they are more well experienced than the ordinary fund managers. And those sort of the people are growing. And also they are sharing their knowledge through YouTube or Instagram or whatever. So that I feel that the ordinary so-called wealth advisors role, whether they continue to exist in the new technology, that is a kind of the question. Also the financial products that you mentioned, also Japan. Actually in Japan, there are more funds than the listed equities in Japan, thousands of the funds. And often the case that they don't last long. So some themes comes up, so it's easy to sell to the consumer. So the brokers go to the retail investors. Now, you know, technology is really the season, so that why don't you buy these stocks, and why don't you make a portfolio, you know, through these funds? But I feel that this sales pitch was quite appealing to the old generation, but a younger generation, at least to me, they try to think by themselves. And of course, some are quite short-termism. But I don't know whether I can call it the majority. My sense is maybe 1/3 maybe short term, but the rest could be long term, or maybe 1/3 is, in a way, they try to follow like a fund manager's approach. 1/3 they don't know, but they are quite interested in. So like a 1/3, 1/3, 1/3. And how to allocate. I mean, from industry's perspective and from regulators' perspective, we shouldn't generalize the retail investors. At least we need to make sure that the investors understand the risk that they're taking. And if the investor wants to take more risk, or they try to understand, they need to be able to access the information. So the transparency and is quite important. And also I feel more and more investors are emphasizing the sustainability of the corporate activities, which does not mean only the monetary return. So from corporate side, they need to look into whom they are engaging. So they need to engage various stakeholders. Stakeholders in this context is not just equities holder, could be also employees, but also large kind of share of the customers. And I think the risk in terms of the corporate risk, the risk which I mean, sometimes they don't know the supply chain or whatever happens, what sort of product they are buying, but this may create the big impact on the business. So the stakeholders communication is going to be more important for companies, but that also gives the opportunity for retail investors to understand the corporate activities. And not all, but maybe hopefully 1/3 of investors try to investigate and try to analyze the companies. But to me, I feel that those are the winners who can so-called fire. So the financially independent and seeking for early retirement, those are kind of generations. And that is also what I feel this pandemic. This is just my personal observation, and I don't know to what extent that would apply to Malaysia. But in United States, also the so-called Robin Hooders, they tweet or chat each other and share the information. So it's each one is quite small investors, but as a collective action, they may be able to move the market, which hadn't happened before. So I think we need to be mindful. Who are the customers? In Japan, I think the biggest or the most rapidly growing asset management is micro asset management. Only 1 yen or even a point can be changed to the funds, and the fee is extremely low, because if you take 10% out of $1, that's too much. So those micro investment is actually something happening, and that is going to be, I think, a new trend. And how to educate them? Well, I don't know. Sometimes I feel that this wording, as a regulator, financial education literacy is important, but that gives the sense that we are looking down those people. But as I said, the retail consumers, they may have a far much superior knowledge. They make kind of the research on a day-to-day basis, and they go to the supermarket, they see the products. And that is actually the new emergence of the new type of the investors, what I feel. And those are becoming millionaires. That's my comment. Thanks.
Thank you. Dr. Tang, do you agree with this?
I think Tomo-san has some great points on how do we look at retail investors, even among the ones who are younger ones that we engage. Clearly, ESG is something that comes through. It's not easy to generalize them, because there are different pots of retail investors, young retail investors, depending on their exposure and where they have been and stuff like that. But generally, there has been a lot more question raised regarding issues like ESG. And as I said earlier, digital assets is something that they're very interested in. And again, the observation is really about the moment there are conversations about digital assets. Those conversations then will always go back to about how how fast the return can come through. And again, when you compare it to the mutual fund industry, it's a very different risk-return profile altogether. Right? The mutual fund industry operates very differently on a diversified portfolio approach. So I think it's really for the industry to explain, to educate, and I think in Malaysia, the other thing I do notice, again, it's not easy to make a general statement. The level of investment or knowledge among our investors have increased the last 20 years. However, in the rural industry, in the rural sector, it's still far from where they should be. Like it's always in the urban area that we've seen a lot of exposure and learning and growth in terms of knowledge. But in the rural sector, they seems to be lagging there. So I guess for the industry is really when we look at the entire landscape, we just need to be mindful that the rural sectors is still lagging behind in knowledge, and we have to be mindful how we market and distribute our products to that particular segment.
We're going to start opening the questions to the floor. I see some questions coming in. But before we jump into that, see the theme is on retail investors. Some of them may be smart, but localized, geo-localized to maybe urban, and never underestimate the retail investors. Institutional investors, I think we can kind of continuously see the progression of how they think about investments and trying to enlarge their own portfolios. But something that is interesting is a conversation that I had with a managing partner of a management consulting firm here in KL. He was talking about the drivers for technology adoption. It's not revolutionary or visionary CEO. It's not good infrastructure like 5G or all the other stuff involved. It's actually the pandemic. The pandemic pushes people, pushes companies, and pushes fund managers to adopt technology like anything before that, right? So hearkening back to what Datuk Tang's presentation early on was talking about, robo-advisory could be something of a serious notion moving forward. And then maybe Tomo-san was talking about micro asset management, where as little as 1 yen, and no human being can manage that, right? You multiply that with millions of investments across the portfolio. So this is the backdrop of this one question that is coming in from the floor. The question is, do you foresee any threat to robo-advisory versus the traditional managed funds in Malaysia? Okay, do you foresee any threat to robo-advisory versus traditional funds managed in Malaysia? Any plans for fund houses to explore robo-advisory? Datuk Tang, I think this question is for you.
Okay, thank you for the question. I would not say that it is like you put them in two silos, right? Robo-advisory, one silo, traditional asset managers, one silo. I would say that the best formula, as I said in other forums, is about using robo-advisory as an enabler tool, as a tool to serve your clients better, right? If those are made available to you as a consultant, to be able to then sieve out a solution for your clients. That to me is where I see the industry going the next 5 years or so. Robo-advisory standalone itself, you'll find the challenge is how do you reach out to the market. It's a very expensive cost to do client acquisition digitally. It is very expensive. However, if the local industry players who have their existing client base adopt the robo-advisory as part of their sales process, I think that's more efficient and a lot of value to be created from that process. From my perspective, in FIMM Asset Management, that's probably what we want to provide, what we want to develop and partner with to bring out to the local marketplace. And I do see beyond that, as we move over the next 15, 20 years, the challenge is that really as the younger ones are used to transact using platforms, and increasingly more will get into the bandwagon, I do expect the industry players to have to think about how do you reach out to your clients and the role that consultants will play in the next 15 to 20 years. That's probably something that the industry would have to think about seriously.
Tomo-san, a question for you maybe. Alan Tan is asking, it seems that volatility is the future because the information flow is very quick now. How could the regulators tell investors that volatility, is not good for you? Maybe it is good. I don't know. Tomo-san?
Well, thank you. Thank you for the question. Well, I don't know the volatility. Probably, I don't know the volatility has increased, and also I don't think volatility is bad thing. Always bad thing. I think this depends on the on sort of investment horizon, and I think retail investor again generalization of retail investors. I think it's going to be more and more difficult, and probably that's exactly the area that the robotic advisors may be able to play. I mean, at least some sort of screening, and that what I'm mentioning, that can be used as a kind of sales sort of technology, just to classify or sort of categorize the retail investors. So again, this very much depends on the investors' investment horizon. I think the younger generation start feeling kind of a concern or fear in a retirement in the future. So their time horizon may be 20 years, 30 years. So this volatility, maybe the huge drop in the index, may be a good bargain for them. And this very much depends on the time horizon. Of course, some may lose because of the FX volatility, but they are aiming for the volatility. They are seeking for the volatility. So volatility itself is not a bad thing. But as a regulator, we need to make sure that those volatility will not create the threat to the financial stability. That is the regulator's concern. And also volatility, I mean, the elimination volatility is impossible. But how to manage those volatility? So when something happens to the market, we try to provide ample liquidity. And that's exactly what central banks are doing right now, because COVID is something unexpected, and that is quite negative to the economic activities. So that's what the policymakers are doing. So I think the policymakers will focus more on the not elimination, but to sort of mitigate the negative side of volatility to the extent possible. That's I think, regulator's perspective.
The chairman of SC's speech this morning before this panel started was talking about CMP3, or the Capital Markets Master Plan 3. This is the third reincarnation of long-term capital markets conversation. One of them is, of course, trying to regulate digital asset exchanges and cryptocurrency, which brings it to the question of volatility, the one that we spoke about. But this question from the floor maybe is for the both of you, Dr. Teng as well as Tomo-san. People are picking up investments in cryptocurrency, which is an unregulated asset. The crypto is unregulated, but I think in Malaysia we have up to 4 DEX, or digital asset exchange, that is regulated. Anyway, the question is, wouldn't this present multiple risks to investors? Do you think that this is a smart idea for investors to go into this space? I think we've touched on this a little bit before, but yeah, specifically cryptocurrency, because it gets keeping a lot of thumbs up. So I think I have to ask this, or else I'm going to get attacked on Twitter or something.
Okay, shall I go first?
Go ahead. It's a tough question. Go ahead.
Yeah. Well, first of all, from regulators, we need to think what is the value behind this asset, and this sort of a crypto asset is based on the sort of trust, or in a sense, at least in terms of the process of validation. At least the crypto asset, which is based on the proof of work concept, requires the so-called mining, and so the power of electricity is the underlying value to create those assets, and also people's belief is translated into the value. But actually, if you start thinking why you believe in the currency issued by the central bank and the government, actually, when I talk about the function of central bank, I always raise the question. Okay, this is the 10,000 yen. This is just the paper, And do you know how much cost to produce this just a sheet of paper? This is just a kind of 20 yen. But people believes this sheet of paper has the 10,000 yen value, like 100 US. So the cost is like 20 cents. So also the so-called the fiat currency or whatever issued by the central bank also depends on the credibility, and the things. Well, the central bank was really upset mostly. Now it appears to us that it's going to be kind of the competition of the trust, which the government or central banks didn't have to worry about. But this is also the time. So at this point, I don't think crypto asset, the trust, can surpass the trust of the government. Still, people believe in the government. If something happens, people go to the regulator, ask for help. So current existing social framework depends on the framework of the government. So inevitably, and people trust in the government. But you never know what will happen in the future. Or also, this emergence of crypto asset may put the discipline on the government and central banks how to behave. So I think first we need to understand, why people trade. And then, of course, there's a kind of, people passing the hot potato. As long as you can find a person who gets it, you may be able to get, raise money. Well, unlike equities already has a kind of established theory, and we sort of anticipate or make a focus on the future value of the corporate. But unfortunately, the crypto asset, there is no fundamental theory which backs up the value, only the trust. And people just making a poll, kind of a beauty poll like Keynes. You don't choose who you like, but you need to choose whom others think like, others think good, or people who like, and then you choose. So this is kind of element of a beauty contest, and I would say whether that really creates the economic wealth or value added, that may be a big question. But again, the original point that if the crypto asset put the pressure on the government and the central banks, maybe that's the economic value. But as long as those assets are traded just for or the expectation, unfortunately, that will not replace the legal tender. That's what I think, and that's also the limitation. And to that extent, I always feel that the retail investors are smart. they know the limitation. So I don't know to what extent regulators should worry on those. In terms of investor protection, we need to provide tell the risk. But as long as far as the risk to the economic activities or economic management, at least at this point, the risk will be limited.
Dr. Tang, do you want to add?
I guess from a risk perspective, or is really, I think from a regulator standpoint, they provide the platforms for investors to be able to assess those assets. However, the investors have to assess of themselves whether they want to invest in crypto assets. And what I've said earlier, seems like there is $1 billion that has been deployed up to now. I'm not one of them, right? I'm just like Ibrahim. I read too old school for these things. When I look at it and you ask yourselves what is the value of Bitcoin, you can never derive the value because it's as much as I finally find the answer. The answer is really more money chase out of it, the price will go higher. And the more people get greedy, the price will go higher. So that's how it's driven. And I will not be surprised one day. I'm not making a prediction. I'm really surprised that one day Bitcoin will reach 100,000, right? Just because the access gets wider. More and more people deploy money, and the amount that's available is limited. I think out of that 24, 25 million Bitcoins, the actual ones that are traded is probably half of it, right? The rest are all lost in transition. So when you have more money chasing it, obviously there's only eventually leads to higher prices. That's all. But whether it has value to it, I don't know. I can't see any of it. But I've been wrong for the longest time. So I think I'll stay wrong for a while more.
No, but you have been right for a few times as well. And when you're right, you're right. You're really right. So, sometimes we take your chances with the prediction. Yeah, I'm going to call it a prediction anyway. We have to draw this panel to a close. It's been a very enlightening conversation. But maybe I can throw a short closing statement by maybe Dr. Tang, a short closing statement before we end the panel.
I think we've been focusing a lot on cryptocurrencies. I think that's probably an interesting topic that probably dominate a lot of forums that I participated. But I think if I want to talk about the industry going forward on the new normal, I remain extremely optimistic about the growth, because there is still $1 trillion of savings in the system looking to deploy for opportunities. And if the interest rates continue to stay low, a lot of individuals do look out for good investment advice. And I hope that as you continue to upskill your knowledge and to be able to offer solutions to your clients, I believe that there are a lot more potential and opportunity for the industry to grow. The industry has grown double digit over the many years, and I'm optimistic that the industry will continue to grow at a high single digit growth rates over the next 5-10 years.
San, your closing statement?
Yeah, thank you. As I mentioned, we need to go back to better situation, so build back better. And hopefully the technology can help, and also the probably more customized investment opportunity can be created through the technology. Generalization of retail investors may be not good way. So with the technology and the help of technology, hopefully that would address the sort of more investment opportunity for individual, and that would mitigate the pressure of aging. And that's what we would like to see. Thank you.
Thank you very much. That was Tomo-san or Satoru Yamadera of ADB, Asian Development Bank. Earlier on, you just heard from Dato' Tang Chi Wai, the Managing Director at Affin Hwang Asset Management. This concludes the first panel, Living in the New Normal for FIMMAC 2021. We're still talking about the next normal, what it means to be working and trying to address the challenges and lessons learned from the pandemic. We'll go for one short screen break. You can use the time to stretch your legs, grab a coffee. Quite literally, I'm going to order some coffee that's going to be delivered to me. That's the new normal. I've never had to order coffee via my phone prior to the pandemic. That's a new thing. Actually, it's not new. It's been doing that for the past 18 months. So it's something that, it's a new normal is a new normal. There's no new about it. It's just normal. One short screen break. When we come back, we'll come back at 10:45 a.m. For us to start the second panel. Again, thanks very much, Tomo-san and Dr. Tang.
Thank you.
Thank you.
Welcome back. I hope you guys got your coffee, feeling a little bit refreshed. We are now entering the second panel of the day, which is talking about every crisis breeds opportunities. In this panel, we're going to be unearthing the key drivers that will help industry to remain resilient, the kind of new opportunities arising from the pandemic, and what would be the key drivers that remain relevant even after the pandemic, moving into endemicity. In this panel, we'll have three speakers, Danny Wong, CEO of Erika Capital, Puan Munira Khairuddin, CEO of Principal Asset Management, and Kalyon Leong Rahan, the CEO of FIMM. Moderating this panel will be Steve Lim, the Chief Learning Officer of Afin Kwang Asset Management Berhad. Steve, over to you.
Hi.
And we are live.
Morning, fellow participants, consultants, and investors. Because of the pandemic, which started to spread ferociously since March last year, the world economies face challenges never seen in history, perhaps except during the Spanish flu in 1918. I'm not referring to an insect, but the economic structure back then was very different. We might not even have an institutionalized UT industry in Malaysia in 1918. While the pandemic decimated many industries, such as airline, leisure cruises, tourism, retail, and the corresponding real estates, the unit trust and fund management industry in Malaysia saw unprecedented growth amidst the restrictions of movements and lockdown. Hence, this session's aptly titled Every Crisis Breeds Opportunity. We have the pleasure of Encik Kalyon Leong bin Rahan, CEO FIMM, accompanied by two industrial veterans, Puan Munira Khairuddin, Executive Director and CEO of Principal Asset Management Berhad, and Mr. Danny Wong, CEO of Erika Capital Sdn Berhad, to expound on this journey and their journey through this seemingly volatile but very interesting period. Prior to this annual convention, FIMM has done a pretty thorough study on the industry and its player. I would start today's discussion with some high-level findings of the survey, after which Encik Kalyon will be diving deeper into the survey findings. After his presentation, we will invite Puan Munira and Mr. Danny Wong to join us in the panel discussion. Without further delay, let's get on it. Okay. As the title aptly says, every crisis breeds opportunity. If you know a bit of Chinese, you know the Chinese word, the Chinese phrase of crisis. It has got a character of danger and opportunity in it. And we saw it in, I think, since last year. I think many industrial players, many fund houses experience unprecedented growth. Okay, their AUM just grew by a very, very big margin at the back of very, very low interest rate environment. Okay, let's move to the first slide. Let's move to the second one, sorry. Okay, these are the industrial statistics, a snapshot of 2020. Okay. Over 12 million customers in 2000, okay? And that's 5 times increase from 10 years ago or 11 years ago in 2010. And 80-20 rule doesn't really apply here. Okay, less than 20% of the high net worth individual and corporate institutions account for 55% of the net asset value of the funds. Okay, what is it telling you? I mean, everybody is going for this part. I mean, this particular part of the cake. Okay. 84% of the unit holders held investment between 1,000 and 50,000. So the mass is still, you wouldn't call them high net worth individual, but they're probably mass affluent. Okay. And there were 8 times increase in investor below 35 years old since 2010. Okay. And I'm staring at the number and thinking of my children, thinking of all the young adults. They are entering the workforce for the very first time. Okay, they are one big market, and very pretty soon, demographically, they're going to dominate. The Gen X, the boomers will probably have to make way. Okay, and 33% of the members or distributor provided online access to customer. Only 33%. Not a very high number, in my honest opinion. Okay, and 9.2 million customers had online access in 2020, compared with 331,000 in 2010. Okay, well, what is the number telling you? Okay, the customers are growing a lot warmer to accessing online portal, doing transaction online, and essentially right now, we are having a Zoom seminar. Okay, next. Okay, when I go through this, remember, these are the responses from industrial players. These are the experience they learned during the pandemic. Okay, now, industrial experience in 2021 and future outlook, many responses are coping well. Okay, they are coping well. They are staying at home, but they're doing everything online. And I myself, before the pandemic, I've never bought anything from Shopee. But now I'm a habitual Shopee shopper right now. It's just so convenient. Okay. So audience, I mean the investors, consultants, and fund houses are getting used to it. In fact, before the pandemic took place, a lot of houses are already thinking, okay, robo-advisor is coming, so how do we deal with it? Okay, so a lot of houses, including ourselves, have already started to think a bit longer term and try to automate the processes. Okay, notwithstanding, those who express concern were due to the following factors. Okay, restricted customer service activities. If you're talking about the millennial, I think it's very easy to ask them to go online, to open the portal, to sign up and all that. But if you're talking to the people who has got the money, the boomers and the so-called Gen Xers like myself, okay, I'm not implying that I have a lot of money. Okay, what I'm saying is this particular category of the customers is the end of the career. They've accumulated quite a bit. Okay, they are more comfortable speaking to a person, either face-to-face, over a phone and all that, and not talking to a machine. Okay, so that has hindered some of the, say, consultants to maybe meet the more wealthy, okay, more affluent clients and close sales. Okay. Over-reliance on face-to-face, I just mentioned it, okay. Lack of digital solution. We look at the number, right, it's 33%. Only 33% of the players offered digital platform, digital client experience, okay. 4 main focus in 2021 and the next 2 years, okay, upskilling consultants. We have been hearing this over and over again. Consultants with margin compressions, with robo-advisors, onslaught of robo-advisors, consultants need to upskill themselves, okay, because they are charging a front end, they are charging management fee and all that. So they need to justify why the customer should not go straight to the robo-advisor or through the online portals to buy and sell funds. Okay, expanding product offering. Okay, we have a lot of products now, but I think there's still room to be expanded. Okay. Managing, mitigating risks relating to uncertainty caused by pandemic. The pandemic took everybody by surprise. Okay, never in our life could we expect the entire economy to shut down? Okay, so these are the concerns. If you were to have touch wood, if it were to happen again, how do we deal with it? Okay. Managing and funding, essentially system enhancement. I think we are talking about IT here, or the infrastructure of the company, to deal with maybe a potential tough time going forward. Okay, SRI ESG initiative, something that we have has come to the forefront, has come to the center stage. If you speak to, it is very difficult to speak to a foreign investor without touching on these particular issues. Okay, adoption of SRI ESG is growing, and 60% of respondents currently integrate ESG principle into their investment process or distribution approach. Okay, another 24% is going to do it. The challenges in this area, investors awareness. I think when I buy a fund, equity fund right now, I probably think of what is my return. Okay, I buy a bond fund, what's my return, what's my risk. I don't think investors nowadays are fully aware that ESG initiative has seeped into the fund management industry and seeped into the psyche of some of the more probably younger or more informed investors. Okay, lack of standards, okay, and benchmark, limited investable universe, and limited talent. Okay, it is a very, very new area. So how are there enough people, are there enough talent in the industry to support a SRI ESG initiative? Okay, to overcome the above challenge, okay, regulatory support in terms of issuing standards, okay, and benchmark, more standardized procedures and information in regards to that. And when the fund houses will launch a fund, when you say this is an ESG fund, do you really mean it? Okay, so I think investors need to know. Okay, next. Initiative to Sharia compliant fund. This is a very, very big area. Our company is also looking at this this area. I mean, beyond the ASB, ASN, there is a massive, massive booming market for Sharia compliant fund. Even non-boomies they can invest in this particular space also. Okay, so the respondents mentioned that they need to increase the product offerings spread for the Sharia compliant fund. And on the demand side, we also mentioned we need to create platform, be it digital or maybe brick and mortar, to enable, to reach out to far corners of Malaysia to tap this particular market. Okay, this is an interesting one. Competing financial products. Okay, there are ETFs, there are equity funds, there are managed portfolio, digital assets like Bitcoin and all that are competing with UT. Okay, the same we compete with PRS, but PRS has got very unique features, the lockdown plus tax incentive to basically compete with those products. Okay, in ensuring the UTS and PRS remain competitive, okay, there are areas that that can be improved on. Okay, the quality of the price, quality of the products. Okay, enhancing essentially customer experience. Okay, understanding investor behavior. Okay, that's something that we have done a little bit of study on. Okay, how do millennials make decisions? What is the risk profile? What is the risk tolerance? Okay, that we have to understand, because millennial is going to be a bigger chunk of the customer base going forward in the next 5-10 years. Okay, I'm done here. Okay, sorry, I've taken a bit longer. I'm going to pass the podium over to Kalian. He's going to deliberate a little bit further on into the findings. Okay, Kalian, over to you.
Thank you, Steve. Good morning, Steve, panelists, and all virtual audience. I think a lot have been said and shared today about this survey that we did recently. And I don't really want to go into the details because we are going to upload it on our website and you can actually download and read it. But what I want to touch or do some justice to it is basically on the behind the scenes activities that led to this report. So this report was actually released in conjunction with FIMM's 10th year anniversary as an SRO. We were granted this self-regulatory organization status way back in 2011, and we have spent 10 years working as an SRO. So we felt that to mark our 10th year anniversary, it would be good to have a snapshot of the industry. This is akin to in other jurisdictions where either the regulators or fund management associations come up with an industry report. So at this time, during the pandemic, we felt that it was good to capture the then, as in a 10-year throwback, the now, as in a pandemic overview, and the next, as in what does the future holds. So that's where we came out with this report. And additionally, it is in line with our goal of elevating our stature as a thought leader and market advocate. So after doing this report, after gathering all the feedback from our members and distributors, thank you very much. And what we have discovered largely is there has been a lot of changes that has happened over the last decade. Thankfully, they were mainly positive and encouraging ones. So if you read the report, you will see where are the areas for improvements and the opportunities that people can capitalize on. And by people, I do mean not just our members, but also consultants. Ironically, 10 years ago, one of the top grossing blockbuster movies at that time was called Contagion, which was about a pandemic. Okay, so that made a lot of money. In fact, I think it made 2.5 times more than what they spent to film it. But sadly, we now have a case of reality imitating fantasy, where we have that unfortunate real-life experience of living in a pandemic situation for the last 20 months. Fortunately for us, the unit trust industry has not been in a pandemic state or a catatonic state or in any way bad over the last 20 months, as evident by the growth in NAV and the growth in number of investors. But if we go back a bit further to the last decade, as Steve has shared earlier, the number of customers or unit holders accounts have increased by 5-fold. And what's very interesting here is that it's mainly driven by numbers that we got from nominee accounts managed by institutional unit trust agents. Of course, if some of you all may want to reconcile this 12 million number with what you see on the Securities Commission's website, where you have 22 million unit holder accounts, there's obviously a discrepancy because, number one, our survey is based on feedback by 70% of our members. Number two, those statistics there does not cover unit holders that are held by way of nominee accounts. So the good thing here is that for decades, we are more used to looking at direct holdings within UTMCs. But now we have a new set of numbers, and I would like to call it a pocket universe, which offers a new dimension of retail investors involved in the UTS ecosystem. So if you were to look at those numbers on SC's website that says 22 million, now with some granularity as to what is within the nominees account structure, you should be able to add in another 10 million accounts, which give you 32 million. Of course, Malaysia has a population of 32 million, and that doesn't mean that if you throw a stone, you definitely hit a unit holder. What it means is that one unit holder can have more than one account. But the good thing now is we know that the universe is larger, and there's a larger pool for everyone to tap on. Okay, next slide, please, Joey. Sorry, Joey, the previous slide again. Yes, this one, thank you. Okay, if I go back in time again, one of the chart toppers a decade ago was Bruno Mars' The Lazy Song, which sold 6.5 million copies worldwide. Thankfully, the song title does not reflect the mood of unit trust investors over the last decade, as their investment behavior wasn't lazy in any sense. Okay, instead of sitting at home doing nothing, based on the numbers that we are seeing, we saw growth in many sectors. We saw growth in terms of number of investors, in terms of their quantum of investment, and in terms of their age bands as well. So we've seen growth in terms of quality and demography involved. In terms of quality, what's reassuring is that we have witnessed increase in investment holding amounts for all investment ranges, with the most significant part in the 1,000 to 50,000 range. So what this could possibly mean is that there has been an increase in awareness, obviously. The increase in awareness in terms of UTS and PRS could have come because people are also aware about their retirement needs, saving needs, long-term investing, dollar cost averaging, and possible acknowledgement of very beneficial point of investing in UDS and PRS. So that's a good sign when we see this growth in all segments. Another point could also be because of simplification of access. As mentioned in the survey, 10 years ago, there were only 33,000 investors with online access to their unit holders' investments. Today, we are looking at almost 1 million people having, it's about 30 times that amount, okay? So we've seen significant growth in those segments. And in terms of demographic age group, we are seeing a good growth in all groups as well. So whether you are a youngster, you are in the silver age economy or so on, there is this growth in population and the shift in society's preference. Next slide, please. Sorry, the challenge of doing this virtually is you always have this slight time lag when moving through slides. So anyway, on the preference note, one inference that I would like to draw from the survey is on the shift in NAV contribution among the various investor segments. While retail investors continue to remain as the largest contributor in terms of NAV, the contribution amount by high net worth investors have doubled. And I seriously hope that this is a result of their past UT investments when they were retail investors. We don't have those empirical evidence to back that up, but definitely that will be an area that we will probe further in future research. The last stats I would like to share is in terms of access to online portals for UT investments. As mentioned earlier, we have got 9.2 million investors with online access today, compared to 330,000 a decade ago. This 30 times increase, I would like to believe, has got no absolute correlation to people playing Angry Birds in 2011, mastering Candy Crush in 2012, or playing Valorant today, but more of the ability of the unit trust industry in embracing technology and imparting it to investors in a user-friendly manner. At FIMM, we too have changed our approach where we have gone down the digital route. It has not been perfect, smooth sailing. We are still facing challenges in digitizing or automating certain things. But what is quite evident is we have provided some options in terms of industry education, as in your online exams, supervision, procurement, and even the recruitment exercises. Next slide, please. I won't touch more on the next 3 slides, which is basically pages 41 to 43 of the survey report. What these slides tells about is what we intend to do to help the industry within the next 2 to 3 years. Once again, I would like to thank the industry, yourself, and everyone else for contributing to our cause and participating in today's event. We look forward to hearing more views from you all in future. So with that, I would like to hand this back to Steve and my other panelists. Back to you, Steve.
Yeah, thanks, Galion. Thanks for sharing the very, very comprehensive survey. We are moving to the panel discussion right now. I'd like to invite Ms. Inche Galion, Puan Munira, and Mr. Danny Wong to stand by. Okay. Before this, I was looking at the program, I noticed the previous session, the discussion points were actually quite similar to our discussion here. So I'm going to try to skew a little bit away from all the general stuff. We're going to break the discussion into three parts, chronologically, pre-pandemic, during the pandemic, and now, since the government is opening up the borders, or slowly opening the border, allowing people to move around, is it any different? So we'll split into three parts, and we're going to have a special focus on the consultants. Okay, what the companies, what the fund houses are doing to support the consultants, to enable the consultants to service their client better. Okay, so let me start by talking about the growth over the last 10 years. Why was it so phenomenal? And was there any pivotal moment? Was there any driver that caused the institutionalization of savings into funds, into unit trust schemes and other form of collective investment? Shall we start with Munira? Yeah.
Sure. Thanks, Steve. Can you hear me?
Yep. Loud and clear. Tell us why you grew so big over the last 10 years.
I would probably attribute it to three main reasons, yeah? Mm-hmm. And the first is the rise of middle income.
Okay.
So when you think about it, the Gen Y, that we call Gen Y, young people, yeah, are actually now, in the years of 26 years old to 40 years old, right? So there's a rise of middle income. They have moved from being youngsters to now, all the way in the employment workforce. And Gen X is anywhere between 41 to 56 years old, right? So this rise in middle income and a shift in demography has resulted in, people thinking more about their financial security and savings, etc. I won't belabor too much about this topic because I think Kalyon touched about this. And second point is actually on diversification of investments. I think, traditionally we've been more exposed to Malaysian stock market or Malaysian bonds, but, in this last 10 years, there's been a huge shift into diversification into, other regions and other types of asset classes as well. So this big shift is not to be underestimated because obviously the universe, the world is now really our oyster, right? Can invest anywhere in the world, right? Whether it's whether it's stock market, people can go on, internet trading and just buy, whatever stocks they wish around the world and funds as well, right? So I think this big shift into globalization is not to be underestimated and hence, couple that with a rising middle income and better, disposable income, people have more choices. And the third one, which is, probably still early, early in this last 2-3 years that we've seen an explosion, undeniably is digitization. Undeniably is digitization. And we saw, a lot more of this uptick in this last couple of years. I can tell you, Principal, we've been around for a while, but I can tell you in the last 7 months, we've acquired 1.7 million new customers. Right?
Wow.
So, partnership on our platform on TNGD, we now have more than 2 million customers actually. So it is in like 7 months, you can believe it, right? We've acquired like 1.65 million customers, close to 1.7 million. So it's an explosion of digitization and digital opportunities.
Do you have digital campaign? I mean, how do you acquire this 1.7? I'm quite curious. Of
course, right? Okay, so if you think about it, I'm quite philosophical about this. We are in many segments of the society of Malaysians. So we have been traditionally in institutional corporates, high net worth, private banking, etc., right? But we are actually now in every segment of the market, right? So the mass market. And I think, it's not just about digital marketing campaign, right? It's about financial inclusivity, right? You can start investing as low as 10 ringgit. And powerful, right? And so I think, Malaysians are there is a market that needs a lot more financial education, and that's why players like us have a big role to play, right? I won't, talking about sustainability, I saw a topic just now, your point, right? Financial inclusivity is a very strong pillar of that ES and G, right? And couple that with the rise of middle income, I think, maybe 10 years from now, Kalyon's numbers are going to look phenomenal, right? Is how are our unit trust consultants, grabbing that opportunity. What it shows is that the market is large.
Yeah.
The market is large is about us educating them, and it's about us reaching out. So I'm very optimistic.
Can I just clarify with you? I left active fund management for quite a while. I'm in training right now. Are the fund houses still restricted by 50% of their total fund regards to investment offshore? Still,
yes.
But is sufficient room for fund houses like yourself to offer other products that invest offshore?
Yeah, because the base is bigger, right? So no problem.
Okay. Danny, do you have? Okay, Puan Muira is talking about rising middle class, the need to diversification, or the investors' awareness or growing awareness that they need to diversify their investment from properties, from FD to maybe some sort of liquid investment like UT and digitalization. Do you have similar experience with Puan Munira, or your experience is different?
Slightly different. Yeah, slightly different. For us, actually, we don't have the luxury to service everyone, and we are very focused. As you can see just now on the slide, that there are certain segment of the market actually need a very high attention. Typically, those are high net worth. And because we don't have the mass servicing agency system or whatnot, we are very focused on our own in-house sales staff. So they are salary staff. So we're very focused on high net worth market. And the high net worth market is very different from the mass market. So though I think even if it's a high net worth market, we are still embrace digital into servicing clients, but we are using the we call a hybrid approach with the high net worth, high touch and high tech approach, right? So for that, we are still going to it. I think most of the things is already similar to what Munira has said. But what I want to touch on is actually the past 10 years has changed a lot. Other than the investor profile and market development, I think the regulation as well as the product offering is also a lot more different, right? So we can see from conventionally people just talk about either you buy a bond or you buy equity funds. But nowadays it's different. Now pre-pandemic, you can see actually even the CMMP2 already mentioned about VC, PE, which is private equity, and then pre-IPO, and then subsequent to corporate exercise and whatnot to high net worth investors to keep the capital intact in domestic market. And similarly to bond market, you will have the like the fundraising and the velocity and depth into the bond market. So the launch of Lola in 2015 very helpful because that opened up the normal retail funds to wholesale fund. And the wholesale fund you can design in such a way that suit certain niche and certain risk profile of investors, which is totally different from the retails. And that actually opened up the market to our local investors to buy into local product and not without going to offshore. And that actually boosts up a lot of our product offering. It's no more like just conventional equity and bond. It actually go many things that is not treasury cannot be found here. From share, REITs, derivative, ETF, specs, all sorts of things we can do.
Okay. So if I were to sum it up, I think principle was essentially fighting an all-out war. They're fighting a big battle. They have a very big army of big battalions. Whereas Arica, being a boutique house, you guys were fighting a guerrilla warfare. You're targeting the high net worth. You didn't quite bother about the mass market, the 10,000, 20,000 kind of market. Okay. Yeah.
Steve.
Yeah.
Not quite correct, actually.
Not correct. Okay.
Not quite correct.
Enlighten me.
Yes, we are in various market segments.
Okay.
When you talk about what we have learned in this, a pivotal point is actually customer experience. I know it can be just, words, but the truth is, we are not a very big country. We only have 32 million people, right? And we are in all segments, actually. So the high net worth segment, we are very big as well. And I do agree with Danny, right? It allows us differentiation. So more this market tends to be more, digitally advised and digitally enabled. But for the high net worth market, right? I mean, I'm, we're very into this market actually, right? So the private banking as well as our consultants, right? And we see an explosion in this as well. And I can tell you, like maybe 5 years ago, our ticket size, right, in this segment has just jumped by, 3 times more, right, per customer, 3 to 4 times.
From what level to what level?
Oh, that one cannot tell us secret.
Okay.
But it has easily jumped 3 to 4 times. Average ticket size per customer, average portfolio size per customer, and healthy jump, right? Meaning, right, our consultants are able to really cater for the kind of investment needs that customers are asking for. But more as an industry as a whole, right? Not just about principal, industry as a whole, this is a ripe market, and it's really important that we are able to differentiate how you serve different markets. This is a really important point. Because if we are to serve, for consultants especially, right, to serve this market segment, right, they need choices. They need choices, they need tools, they need skills, and they need professionalism. Differentiation in serving this market segment is key if you are to go bigger in this industry.
So essentially what you're saying is with all these strategies, you manage to deepen the customer's pocket.
Yes, I can tell you, for example, right, the opportunity to our consultants, for example, right, you look at some of our banking partners, and we're very big with the banking partners as well. I can tell you that, the kind of numbers that I'm looking at on their 5-year CAGR is like 25%, right? And the industry is growing about 7-something%, right? And the wealth in our banking partners for unit trusts specifically, the CAGR there is like 25%. That it is ripe. These high net worth individuals are looking for advice. It is for us to lose if we don't grab the opportunity.
Okay, let's move to the chronological. Let's move to March last year. Okay, we were shocked back in those days. I mean, in addition to being shocked by the market collapse, we were also shocked by the ferocity of how the pandemic has spread. Okay, we cannot go to office. We are scared. What did we learn? I mean, were you shocked? And I'm a member of the crisis management committee of my company. So we have to have frequent meetings to talk about how to service clients, who should stay at home, who should be going to the office. Are we going to have an alternative site to support for all the support function? All these things. Share with us. Maybe I'll start with Danny this round. What did you all do? At the advent of the pandemic.
One of the beautiful points and advantage to a boutique and a niche house for us is that we have small numbers. Even our investors, we only have less than 1,000 investors to care. So within one day, in fact, just 1.5 days, we contact everyone. So I think to reach out our sales staff, to reach out our clients is not really that difficult because we only have that handful of numbers. And also in terms of the practicality, because we don't have to contact so many people, so a simple call trade within 5 minutes, we can reach all our consultants and all our staff, you see. And then furthermore, we just brief them maybe another 10-20 minutes. What should we do? Because we're used to those things. Actually, this pandemic, I would say during the March and April, it was a wonderful time for us. We see plenty of opportunity. We go all out because our culture is very much like, we rather serve the investor when they need us than the normal days. Normal days, I don't need us. They're very, very bullish day, then they will do they know what to do. But only disaster crisis time, they need some kind of advice, to avoid panic selling, to avoid what kind of mistakes will be made because of emotion. And that's the time that we handheld them, and then we hold them throughout this thing. So I must say it's very, very, very fruitful experience to us because we remain very nimble and niche and on the size. that's a very good experience for us.
Yeah, I've been in sales before. I can't agree with you more. During crisis, the best thing to do is to handhold your customer. A lot of people do. A lot of salespeople don't do that, and they just lose the trust of the customers from there on.
Exactly.
Okay. Yeah, maybe tell us what did you all experience? I mean, did you panic?
No,
you have a very much larger team to manage. You'll be wondering whether they're staying at home, whether they're working or not. That kind of stuff.
Actually, right, I echo Danny. It has been a phenomenal year. It's been a really, I don't want to jinx it, but it's been a phenomenal year. 2 years actually. It's been a phenomenal couple of years, right? I'll just share some of our stories, right? When the pandemic hit, we were lucky because in the last 3 years we have been really focusing a lot of resource and budget into digitalization. Okay.
Digitalization. Okay.
Yes. So when this happened, right, we've already moved our customer to cloud, and our cloud customer service is already in cloud, and therefore, I can tell you, and until today, we are under 10%. Only 5% are really physically at the office because we have done that work, right? So customer service is on cloud, and we had hundreds, maybe 1,000 webinars. I'm not sure how many, but tons of those, right? We upgraded everyone's laptops, so everyone had a new laptop, and are connected, whether it's Teams or Zoom. So digitally connected. We were very lucky because when that pandemic happened, thank God we were already ready for it, right? Of the back end as well as for all staff. And what it forces us is for the consultants, for example, we rolled out this thing called Principal Direct Access, or PDA. It forces people to have that paradigm shift and do all their transactions on the platform. I can tell you in this last maybe 9 months, we've seen about 72% in adoption rate for our digital platform for our consultants. It's a brilliant jump because customers also are gaining confidence transacting on digitally. So I think like the title goes, right, every crisis breeds opportunities. It forces you to really make do with what you have and be really good at it.
You had a digital strategy before the pandemic, and the pandemic just served the test bed on a silver platter to you, right? Am I right?
Yeah, but it's not a silver platter. I think you would say that they really work very, very hard. And it's quite amazing, right? Because what used to be just one small digital team has really changed the paradigm shift of the entire company, right? In fact, my vision is that we want to be a digital company that serves all market segments, and we want to be known for that.
Yeah, I just want to touch a little bit on the opportunity during the pandemic. As most of the central bankers in the world, be it Fed or the BOJ, everybody is like slashing interest rate to almost zero, and that has prompted a lot of FD monies to flow into other products in search of yield. And because of the QE, all the massive QE done by either developed China or developing country, that has prompted, given equity market a booster. So tell us whether that has helped you. How has that helped you, Puan?
Definitely, right? Globally, when yields are low, and in Malaysia, when yields are low, there's a hunger for that positive delta to current low yields, right? And so there's a drive for that. And I think it has really helped us. We've seen this last couple of years being really very strong. Equities, actually, right? Very strong. And certain, mega trends, right? Like technology and healthcare obviously has prompted, that rush into equities as well. But this sort of trends, right, will continue to stay. And investors, especially high net worth, are a lot more financially or investment educated these days, and they do watch this. So I think, this backdrop of low interest rates and low yields has certainly fueled, record high, to your point, right? To many fund management houses, record high in flows, you know, and I think it will continue. But going into, you know, the next couple of years, we still think this 2022 will still be an equities year. You know, there's a plethora of products, right? That's into mixed asset, etc. But what's important, I think, for investors is that to really know what is your core holding, right? What is your real main goals? And have that core holdings, right? It's in Malaysian ringgit currency or some other currencies that you're exposed in, you know, for education or for investments. Know your core holdings, and you can have as many tactical or satellite strategies as you wish, but knowing what's your core is key. And we need our consultants and our fund management houses like ourselves to really propagate this, because when you have good core holdings, no matter how the market does, right, you will be protected, right? There are various really good asset allocation strategies, and we need to educate people more about this.
Yeah. Danny, I mean, in terms of investment side, what is your experience? I'm sure when the market was up, I know you guys are pretty active with all these deals. Did you see a picked up on these kind of activities or some? Basically, in search of yield, the customers are getting more and more edgy, more and more willing to take extra risk for a increased return in yield. Yeah.
Yeah, from the high level perspective, I think they know the staff, they're very informed. So I think one of the things is actually to share a pocket. I think they will just top up and top up and top up, you know, when they make money elsewhere. And then you look at the banking deposits. I think today we have about 2 trillion deposits there in total, right? 10% of it is actually 200 billion. And our NAV is only 500 billion, 500 billion. You just imagine that's a 10% of total deposit is 40% of our total NAV, you know. Yeah. So there's plenty opportunity for our consultants to go after. I mean, the market is there, the products are there, you know, and people are getting more sophisticated and more knowledgeable. So naturally, you don't offer, somebody will offer them. If nobody will offer them, they will go elsewhere, you know. So we have to do our job to service them, and then the pie is big enough for everyone. You know, it's huge enough for everyone. And the consultant must do this, you know, to align, to upskill ourselves, to do all the things. I can see a Malaysian a little bit more, I would say, not so aggressive. Right? Not so aggressive. So they're actually in conventional, because people taught us, you know, from the very old days in the 70s or 60s, those are, I say, older generation. The parents just say, put your money in the savings account. That's it. But today is different. Today, you can see, hey, invest your money. Not so much at the deposit anymore. Things change. That's why you can see the millennium started to see things differently from our own generation, which are those are 60, 50, you know, totally different. So there's a move in this kind of landscape, and I can see like what Morena say. So long as you know your asset allocation, you know your target, you know a tactical play, I think everything will be fine. The only thing is that you need to for asset consultant, you need to be close to investors. Then the trust is very important.
When you say,
I think Steve, to add, right, Steve, this is really important, right? It's really important because we are a core fund manager for at least 3 banks, right? Where we've come up with asset allocation products. We also have this for our agency force, right? And that when customer does their, you know, risk assessment, you know, let's say the customer wants between 6 to 8% consistently, as long as he can, right? I think that core holding is important, and I think we need to advise more of that, because, you know, you need to leave that kind of asset allocation work to experienced fund managers like you know, like ourselves, right? Or any of the other fund managers. And having that steady, consistent return is increasingly very, you know, very popular. We've seen, you know, huge flows into our asset allocation strategies.
Okay. It's like umbrella fund. Like, are you talking about umbrella fund or something like that? A fund of funds?
Yeah, something like umbrella funds, right? Or target risk type of funds, right? And it used to be quite boring, but no longer anymore, because, you know, we noticed that high net worth investors like this type for their steady income type of return, And then they can have other satellite strategies that can put in, global technology funds or whatever there is, right? But in the core, they have portfolios or products that give them a consistent return in the.
Well, organizer, just remind me I've got 4 minutes left. I got a shot.
dear.
I thought I got 1 hour. Okay, let's take. I'll wrap it up later. Let's take a question from the floor. Okay, this is from anonymous. This person wants to ask. Okay, as usual, this question always popped up. I want to ask, how about unit trust? I think what he meant is unit trust wrapped in crypto assets wrapped in unit trust. Are you guys doing it?
Let me answer this. I think anything is possible in future because unit trust is just a tool. We can democratizing anything in a big way into offering to a small into retail market, provided the investor must understand the risk of it. Right? You want to go into crypto, you want to go into whichever, go on, right? But be careful of the risk, be worried about the risk, and not just returns. So today is 60,000 doesn't mean that it will stay 60,000 there, right? In terms of price, it may go down further for Bitcoins, for example, right? So with the open eyes, with the risk, understand the downside and upside, and of course don't risk all your money lah. So long as you know what is it, we can do anything. Just let us know as a fund house. We just democratizing everything that we can do, provided of course within the framework of SC, right? So that's why I like wholesale fund, because wholesale fund you can structure in such a way that you cut off those who are retail investors, which is actually may not in general, not all in general, they may not understand risk that well. But high number of people, they do business, they are highly educated, they understand the risk. For that, they can open up anything for them. So this is something that I like.
Yeah, I think what Anonymous is asking is essentially, I'm interested to buy crypto, okay, but I'm not comfortable with all the platforms out there. Can you guys, industrial player, the fund houses, come in, wrap it, and do the duty for us, so that we as an individual investor, we feel a bit more comfortable buying into a volatile assets being wrapped in by a reputable house like Erica and Principal. Would you consider something like that? I think they probably want an answer that you would consider doing something like that. Maybe
Morana will share more, but let me say something. There's something that I don't understand totally, and something that I cannot stomach the risk, I will not do it.
Okay.
So something must be of fundamental right, and then can be accessed into the valuation, then I will do it. Now you're talking about some crypto that I cannot access their fundamental of it. I don't know what is underlying. I will not do it. For simplicity, I cannot answer the question.
Mira?
I would agree with Danny, right? Trust is just a way of structuring things, and whether we want to go into the underlying, right? And we need to understand the underlying. But what I do like about the technology is the tokenization technology. So we're always studying trends and we're always studying products, right? I think when we are more confident about what is the underlying, but for now, not immediately.
Okay, fair enough. Okay, whoever is asking this question, you heard it. Okay, okay. Unfortunately, I can't take this question because the organizer has reminded me I only have 1 hour. I'm going to give the panelists an opportunity to say something to the consultant, especially. Okay, we start with Munira. If you were to tell the consultant, okay, Danny had just said there are how many trillions of savings in the market. What is your advice to them? Okay, yes, we heard upskill consultants and all that kind of stuff. What are you doing to support them? And in what areas should they upskill? Yeah.
Okay, if I were to advise consultants, right, I would say this one thing. Longer about quantity of customers, acquire. Because quantity large quantities of customers can be acquired through digital mass market platforms. But for consultants, it's about the quality of the customers that you bring in and the quality of advice that you impart to the customer.
Yeah.
But it's very important, because if consultants, unit trust consultants or PRS consultants continue to be relevant, we really need to be, embracing financial planning, embracing holistic advice. And I can tell you that I just shared some numbers, right? How, the preferred segments in banks have grown like 25% in 5-year CAGR type of numbers, right? And all the statistics that we shared, the market is ripe.
Yeah.
Are waiting to be approached, but we need to approach them with, professionalism and skills. And as I mentioned, we have provided ours with digital platforms so that they can spend time advising and giving, good planning for longer term. I just want to say this, right? On top of this rising middle income is also income replacement ratio. So retirement needs is going to be really, really critical, right? Malaysia will turn aged society, depends on which report you read, 2030 or 2040, right? And so we all know the statistics at EPF, how retirement is not enough. And reality, right? Our income replacement ratio in Malaysia is only 30%. What is income replacement ratio? Whatever you earn today, right? You need about 70% of what you earn today to support you in retirement. So do the math. If you earn 10,000, you need 7,000 monthly in retirement. Do we have it? We don't. We're only at 30%. So I will leave that to the consultants as my final parting words, that the market is for us to seize the day, and all the best, because the oyster, the world.
Where is your oyster?
Yeah.
Danny, you.
Yeah, I totally agree with all those things. But I think we as a human, we have only 24 hours a day.
Yeah.
There's so many things to learn, and so many words and so many messages say, hey, upskill, development. I think we have just that much of hours to learn.
Yeah.
We have to work, cannot be work in silo and isolated from the rest. Work in a team, right? Important, spend more time to service and to hold our investors' hand. I think with the trust, then you work in the team. If you are weak in certain things, or technical knowledge, for example, product knowledge, it's okay. We have the technical team to help. All houses have this. No worry about that. Important is actually we must hold on to our code of ethics, do professional services to them, right? And gain the trust, because unit trust, the basis of unit trust, beside the performance, the backbone is trust. The trust. You must earn the trust so that people will continue investing with us and continue like our partner. They will hold life and for generations to come. Trust is important. Spend time with investors. The skill is okay to really earn, to learn, right? But important, don't compromise on the time to service investors. That's all I want to share.
Okay, and thanks, Danny. I'm sorry, Kalian, I left you in the cold because I just got the brain of these two veterans. Do you have anything to say to consultants?
Just a quick one. I just want to end this session on a reassuring note. Throughout this whole pandemic, FIMM has not received any complaints in regards to switching, investment, and also redemptions. So I hope that trend continues. And this is also to give assurance to not just the consultants, but to investors that it's very much BAU in terms of all the members and distributors. So with that, thank you again. Happy investing.
Yeah. Okay. Before I end this session, I just want to say one thing, because I just recently read something. You look at US, it's a very developed country. Okay, there is a lot of robo-advisors, there are a lot of digitalization, a lot of platforms to either trade shares, bonds. You have Robinhood, you have Ameritrade, TD Ameritrades and all that. But when I saw that number, I got a shock, because I forgot the number is in the trillions. There are still trillions of assets that are being managed by FAs, financial advisors. This is US. It's a very, very... in terms of capital market, is at the forefront. Even after so many years of evolution, changes and all that, a lot of money is still being controlled by IFA, independent financial advisors. So if you're a consultant, don't think robo-advisors and all this digitalization is going to be a threat. They should complement your process. You know, I just want to add one more thing. Is essentially, to me, is how you connect with the client. So if you want to connect with the client, you must learn to be a conversationalist. You must be able to conduct a conversation. So you must be well-read. You must know a lot of things. You can't be talking about investment all the time. Trust is being earned from exchanging views about politics, social, food, shopping, whatever, you know. So read widely. Okay. So that is coming to the end. Given the time allotted, we have come to the end of this session. Every crisis breeds opportunity. Hope as an investor or a consultant, you have garnered or gather some pointers to help you navigate, hopefully not so troubled water going forward. My sincere thanks and appreciation to the panelists, Encik Kalyan, Puan Munira, and Mr. Danny Wong for sharing your thoughts on the various areas that we just covered. Good luck in your investment journey going forward, and please stay safe when you're going about town shopping, because I just went to 1U over the weekend and I couldn't find a parking. Everything has gone back to normal. It's amazing. Okay, thanks and goodbye.
Thank you.
Thank you very much. Thank you.
All right, that was a very interesting conversation. And yes, I too just came back from One Utama over the weekend, and yes, there is no parking. So I guess life is returning back to normal. As we do this, I am doing this from my workplace. What would normally take me 20 minutes to get from my house to the office, during the MCO, it took me about 1 hour to get to the office. Which gives me a lot of anxiety, because I know we have a live show at 9 o'clock with you guys. Because of this, it also brings about that conversation of our next panel discussion. With all this returning back to normal, are we really embracing normal as it is, as we understand it to be? And that's why this next panel will talk about what the future holds. And in this panel, the third panel of the day, we'll be talking about how to stay relevant through product innovation and diversification. The speakers will go through how the acceleration of digitalization and digitization is going to change the landscape of future investing. We've heard a lot of nuances about cryptocurrency, digital asset exchanges, how to see if fund managers can wrap around their products with a little bit more volatile products and see if they can do the due diligence. there's a lot of these themes coming up, and perhaps this is what this panel is going to unearth. What better panelists to talk about this rather than the two esteemed guests that we have for today, which is of course Dr. Umar Swift, the CEO of Bursa Malaysia, as well as Najmuddin Lutfi, the CEO of BIMB Investment Management Berhad. Both I have spoken to quite extensively and very, very impressed with the idea that they have for the future. But of course, this is a panel that's going to be moderated by the even more esteemed Jasbir Kok. So over to you, Ms. Jasbir.
And we are live.
Okay, hi, good morning, and I think we're almost getting into lunchtime. I think the last panel added in a statement as to say the world is your oyster, so sort of reminded me for lunch. But anyway, let's see what the future holds with this panel that we have. Very outstanding panel. Dr. Omar, nice to see you again. And Encik Najmuddin, lovely to see you again too. So I think before we start the panel discussion, I was thinking maybe I'll just set some sort of context to how we would like to shape the discussion, although what the future holds is really up to us to guess. And I think even the last couple of panel discussions that we had, there were already some insights being provided. But I guess at this point in time, we've come from the past. We saw the present as to what the opportunities that have presented themselves. And I think this panel, you have a little bit more of, you need to look a little bit into the crystal ball and see what the future holds. But the last 2 years that we have seen have been really transforming for everyone in terms of supply chain as to how services are being delivered to consumers. And I think that's what we have also experienced for the financial services industry as well. And one thing that we have come to see is technology, the connector between investors or the public towards the services being provided is omnipresent, right? And it is responding to investor behavior, and it is also shaping as how the industry move forward. So one thing that has become very clear is that remaining status quo is not an option. And agility and adapting, I think that's the buzzwords that the future holds for us. And so on that note, like this morning, we had an insight into the Capital Market Master Plan. I think that's also a guiding factor as to what's going to shape the industry as we move forward. And there are few, if you look at the Capital Market Master Plan by the Securities Commission, I think that was unveiled last month, there are few things, a few trends that are coming up very strongly. For example, the growing diversity and the sophistication of investors, right? And that is going to have a huge impact on the evolution of the industry, you know, for the next phase of it. And that will also have an impact on how services and products are going to be delivered, the connectivity. At the same time, I think we are also starting to see, and I think there was the first panel alluded to it, is the demographic change that's happening in Malaysia. We are heading towards an aging society. So when you get into an aging society, you know, like not too long in the horizon, probably the next decade, the needs are going to change because the aging society, or what was referred to as the silver hat generation, although I think a lot of us, we dye our hair these days to continue to be ageless. So that generation is probably going to move towards wealth preservation and even looking at wealth decumulation. So those trends are changing. But at the same time, the demographic change is also having an impact on the new generation of investors that are coming up, the millennial investors. And the millennial investors are, very obviously more tech savvy and perhaps more open to product innovation, which will help to drive the industry forward as well. And the other thing about, from the nation point of view, as we head towards high income nation status, now what's going to be the impact of that? So we're going to see a new class of investors, which we are already seeing in terms of the high net worth investors, and their needs are going to be different. And also the search for innovation, the search for products, and the search for the service, because I think we're getting into a stage where one size doesn't fit all, right? And this is where the search for SRI, ESG is also coming forth. And this also impacts the millennial investors, as we see them coming forth on the horizon. So there's a growing interest in that space as well, being sustainable, being responsible, and doing something or investing for the bigger good, as we may say, right? So we have all these trends, and regardless of the fact that whether it's sustainable, socially responsible, things that takes into the bigger good, the quest for yield continues, right? The quest for innovation continues as well. So we are faced with all these factors, including, or rather being enabled by the whole space of innovation and data, big data, AI. So that's going to drive a lot of the trends. So these are the things that I thought of setting a little bit of a context that could guide our discussion to give some sort of a glimpse or insight as to what the future holds for the industry and also the various stakeholders in the industry. Because apart from the fund managers who have to be unveiling or looking into, what's going to be the demand in the future, what are going to be the needs, from growth to preservation to decumulation, and also looking into technology, right? So that's where the whole space is. So with that as a backdrop, and this is the way I look at, the things that are driving and shifting change, coming from the past, looking what happened in the present. So I would like the panel to just think about these factors and any other factors that they think that would drive the shift or would herald the new age, right? And normalize the so-called new norm, right? So I thought I'd just set the context about the accelerated changes that we are facing. And perhaps with that, maybe I'll invite Encik Najmuddin, because you are in the thick of it and you have faced a lot of these trends as well, and you're responding to it from what I gather. So perhaps I let you take the stage as to what the future holds.
Sure. Thank you, Jasbir. That's a wonderful and excellent introduction to what we're going to discuss today. I mean, you mentioned about new norm. Look at us. We are at home doing this conference. So to be honest, I'm still not quite sure what's the new norm, because we're not back at the office yet. We've heard about reopening of the economy, and I'm sure Dr. Omar also can see this, the reaction on the stock market. I think we've seen the stock market has done very well this year. So you see the work that we have done, we've looked at the future 5 years ago, really, and what we have now, we are living, I mean, at least for us, we are living the future that we think is going to happen in 5 years. So now, looking at what's going to happen in the next 5 years, and obviously with this pandemic, we really need to, relook how we can, stay relevant, and how we can be, I guess, relevant to the investors, moving forward, especially on our, delivering our services. I mean, you mentioned about at the end of the day, investors still looking for yield. Anyway, I just have a couple of slides just to, to have, I mean, it's not so much of, very formal sort of presentation. I think a lot of the content that I have in my slides, I think most people, will have seen and will have read. If I can move to the next slide, please. Basically, just to give you an idea. So like I mentioned, we in 2015, I think the Securities Commission and the central bank actually have talked about ESG and sustainability. I think globally, it's been talked about, for quite some time. So we saw a niche, yeah. I mean, as it is, we're already a full-fledged Islamic fund management company. There's a lot of I guess we're sharing the same sort of common values like the SDGs, SRI, and so forth. We've launched the first product. So 2015 to 2019 seems very quiet. I think 2018, 2019, I think a lot of the fund houses are warming up to ESG, but we see a huge spike all of a sudden in 2020. Yeah. From only 1 or 2, now we have 32 SRI funds. Even when we launched our first ESG product, there's still no SRI framework yet. So in a way, we felt like, okay, luckily we've looked at this and we've done this. Now we have a wide range of ESG products, and then this conversation just started. I mean, to us, what the future holds is impact investing, responsible investing. It's just gonna be, it's already a mainstream. It's just going to be part of our life. If you have a solution for your client, between the ESG fund and non-ESG fund, I think post-pandemic, I mean, it's a no-brainer. Most investors will definitely choose a responsible fund. So I think to the consultant and to many of us, I mean, if we have not, built up our capabilities and understanding what is SRI, what is ESG, what is sustainability, we're quite behind that. So we need to quickly, understand this, because the thing is about ESG and SRI, it's not like Sharia. Sharia, it's coming from the Quran, so it's very standard. The principle, it has a standard principle. But for Sharia ESG, as you know, different parties, different groups have different views. Yeah. But again, we need to start somewhere. So one thing that we have established, we are actually in the 700, 800 billion industry. Hundreds, probably thousands of products. I think this will be disrupted because I'm sure clients will be interested, to know whether, we as a fund manager or we as an advisor, do we have a product that will make an impact investing, or can they become an impact investor? So responsible investing, it's already part of us already. If I can move to the next slide, that's one on sustainability. The next one is we're seeing these new asset classes. I mean, we're so used to equities and, bond or suku, yeah. But what we're also seeing that, the SC is taking the lead, to introduce, new, investment instruments, yeah. Like the crowdfunding, like the P2P platforms, yeah. So of course, the underlying to this is somewhat similar to a bond. It's financing in a way, yeah. So, but it's also introducing a new asset class, yeah. Again, this is also an opportunity, not just for fund houses, but also for consultants. There's also new asset class that probably can address. Because at the end of the day, we know all our investors, whether they are high net worth or the masses, they want a product with high returns with very low risk. See, it has never changed. I've been in the industry for 20 plus years. It's never changed, and it's always short term. Yeah. So, but the good thing is that SC has, I think if you read the SC's annual report 2020, there's a lot of information how they have seen growth on P2P financing platform. Yeah. So, and even recently, with the on discussion of the cryptocurrencies, that now we have RMOs, So again, this is introducing the new asset class. So there's opportunities, the regulators actually have provided the opportunities, providing clarity to the industry, both the buy side and also the sell side. So I guess how do we then, take these opportunities? So this is already happening now. Yeah. Next slide, please. So even for us, I mean, just a quick case study on BIB investment. I mean, what we're seeing is, we're going to partner with Arabas. They actually have developed an AI sort of portfolio management system. Literally, in a way, we do not need a fund manager going forward. We don't need a portfolio manager going forward because everything is AI driven. Because as you know, at the end of the day, we are fund manager dealing with data. Of course, there are many school of thought and say, like, oh, we still need active fund managers. It's different, machine. But the thing is, machines are progressing. They are learning, as we speak now. I mean, there are more advanced technology out there. But what I'm saying is the technology is already available now. You can actually do a strategy, an investment strategy in just 10 minutes. You just can customize it, whatever the strategy is, then you can develop a product, even to a point that you don't need to create a unit trust product anymore. You can link up to any platform, and the individual investors or any investors can actually customize it. So this is not the future, it's already happening now. And second part is on the Sharia ESG. Well, the thing is about Sharia ESG is all about getting the data. What kind of data is non-financial information data? It's like how you treat your employees, how innovative your product development, your board composition, how you treat your supply chain. Those are non-financial information now. It's being quantified through AI and big data. So in our case, we're able to see companies, their ESG score, their United Nations Global Compact score. And now there's a technology be able to also check on your carbon footprint. It's called temperature score. As you know, the Paris Agreement, the benchmark is 3 degrees Celsius, or is it 2 degrees Celsius? Yeah. So now we can actually measure. So in future, you actually have a product. One is an SI product. At the same time, also whether the companies comply with the climate change. It's already happening now. Yeah. So everything now is being able to quantify and measure because of AI and big data. Next slide, please. So this is an example how we can develop product now, using AI. We just need a dashboard. We don't need to have 5, 10 people in product development anymore because data is all connected. If you want a China strategy, we can do it immediately in 10 minutes. We want a European strategy. We want an Asia strategy. So it's easy now. Yeah. So this is not even the future. Next slide, please. Next slide. Thank you. So really, how does consultant and us, how do we coexist, with all these advancement in technology and in sustainability? It's a very tricky question. But I think one thing for sure, I mean, we understand and we learned the last 2 years, we now put down in our house, right now where we are now, we are with our gadgets, with our phones, we go online a lot, we actually have a system now how we're going to pull data and information. So similarly to our client. So the key thing is the speed of us getting the information to the client now. If the client are so used to getting information now, from online or whatever, data being pushed. So how can we be able to provide information? So real-time information, of course, is key. Yeah, you can't be sharing information that is outdated, even 1 or 2 days. Yeah. So, and also I think it's important also to really focus and segmentize your market, I mean, I guess for all consultants, I think it's worthwhile just to focus on the high net worth. I mean, let all the robo-advisors and all that, to handle the mass market, yeah. But I think but again, if you are targeting the high net worth segment, also mean that you need to, you need to have a different skill set. Yeah, you need to be more equipped. Yeah, I think one of the areas that the high net worth investors also struggling to understand is on sustainability and also on ESG. So I think this is also an opportunity for consultant, to brush up your knowledge and understanding on ESG. Because if you're representing any fund houses, those fund houses would have their own ESG philosophy. So, understand that clearly. And then I guess consultant, this is a model I think we have to agree, because in order to, at the end of the day, you're managing the client's portfolio. So you wanted to be really honest about it. You really are committed to manage the client's portfolio. So you really have to move from this very transactional sort of relationship to more advisory, more profit sharing sort of model, meaning that if you don't make money, I'm not going to charge you. But if you make money, let's agree some profit sharing. Yeah. And then, of course, we're so used to this virtual environment. So I'm sure, we'll be getting better on our virtual engagements with clients. So, how we can be more efficient and clearer on this one. So again, how do we coexist with digitalization? How we can service our clients better? I mean, of course, with digital, we don't need to expect the client to call us and then we fax them the statement or email them the statement. So we should be able, if the client just want to know what is their current net asset value or portfolio value, they just be able to look at the app. Yeah, but I think you should reserve your valuable advisory for the client. Yeah, so client updates is very important. The thing is, sometimes the clients are not happy, not because the fund is not performing, it's because that they're not getting the update, because most of the investors understand they are going into investment, it comes with risk, it's very important that, when market is down, during uncertainty, you need to engage the client. I think that it's given, yeah. So that really differentiates between you, an effective consultant or not an effective consultant. Elevating skill set, I think this is an ongoing thing. I guess one area is that I guess most of us need to figure out, how you be able to upskill yourself when it comes to digital and also sustainability. Yeah, product pushing is a big no. It's not going to be the way forward or even now. Yeah. So yeah, and the thing is, a lot of feedback that we got, you have Wahid, you have Raiz, you have Best App, you have all these robo-advisor, you have Stashaway and so forth, So it's very difficult, for you to, get clients. But the thing is, like I said, you need to really focus and define who is your target market, because as you know, the high net worth clients who has R1 million will not be able to go through robo-advisors. And if they can, they still want to talk to someone, if anything, at least now, yeah. I mean, at least we are in that kind of market, yeah. Even the current infrastructure would not allow you to invest R1 million, right away through a digital platform, yeah. So I think if we understand who our market, our segments that we're targeting, then we can be able to design our service, be able to design our products. And obviously, it cannot just be one product, it cannot be a product push. Next slide, please. I think this is my last slide. So same thing, I mean, we are facing this changing landscape. And when we are able to go out, when the economy is really reopened, so I think very important that we will prepare with this new future. So at the end of the day, as consultants, at least, why we are in this business, because this is a great profession, because you are able to provide advisory when it comes to wealth, to clients. You're like a doctor, but you're a doctor when it comes to financial health. Yeah, and on top of that, this is a profession that you can work until your 80s or 90s, And the great thing is, when it comes to advising on investment, it's about recurring income. And if you work closely with the client, be able to effectively advise the client, you will see the income, coming to you. Yeah. That's basically my lifestyle, because some of the points that I have in my slide already shared before. So that's my thoughts, Jasbe, basically.
Yeah, thank you, Naj. I mean, that was really very insightful. I think you've covered a large spectrum of what we think an inkling into what the future holds. I think you talked about a few points, and I just want to bring them up here. And firstly, is in regard to innovation. And innovation, I like to dovetail it as well towards things being sustainable and also taking into account the bigger issues at play, like ESG and all that. And what fund managers can do in response to investor requirements and also changing investor appetites and trends, the industry can respond to it. However, at the end of the day, you need to connect the investors with the product or with the houses, right? And for you to do that connection, I think the distribution channels becomes very, very important, because we are talking about supply chain at the end of the day. But for that to play an effective role, that needs to evolve as well. That needs to evolve as to what are the way products and or services are distributed. How do the intermediation channels, regardless whether they're UTCs or institutions or whatever, how do they make themselves, how do they up their game as well? Because they need to know the products, they need to know the services, they need to know how to present it as well. So there's a huge upskilling and that's involved, right? So that's where the connection of the intermediation channels becomes very, very important. Without the intermediation, you can have the best products. You can have products that are responding to investor demands based on whatever data that comes to the product manufacturers or to the service providers. But if you do not connect them effectively, you may lose out. You may not hit the sweet spot. Right? So delivery of service, regardless of the channels that we use, I think is important, because they need to transform, they need to innovate as well, right? So I'm very glad you brought up that point, because I think that's a very critical point. And you also talked about technology and the AI and how big data is also disrupting. Apart from services, it's also disrupting the way the products are designed, whether they're on platforms, whether they're in conventional houses, right? So I think that's also very critical. I like the point that I think you made an inference too. As we move forward, it's not a substitution, but it is a coexistence. And it is a leveraging, from the strengths of every sector as well. So with that, I think there are a few points that you brought up that I picked up. There's relevance. We need to focus on relevance. We need to focus on innovation. We need to focus on inclusion, because we need to be able to include everyone into this whole investment management space, right? And of course, digitization. Yeah. So you made a lot of points, even though you had those couple of slides. And also, like, where are the areas for upskilling? So maybe with that, we could segue to Dr. Omar. And I know, Dr. Omar, in Bursa, some of these issues you are also dealing with, because you also have your delivery channels, you have your intermediation channels. So perhaps I could get you to share your thoughts as to what does the future hold for the investment management industry, and the future, how is it impacting the various stakeholders in the game? Because there are many stakeholders, and we won't be able to cover them. And what are some of the insights that you have developed that you think will be very useful to also get the investment management industry to continue to be the critical mobilizer of funds and also in terms of investor needs. Over to you, Dato.
Thank you, Jasbir. And first, thank you for FIMM for inviting me to join the panel today. And really, between yourself and Nudge, my work is done. But I want to take on a few of the themes. Broadly, we have what the future holds. So what does product look like? I think, technology is accelerating what is the democratization of investing. We all remember Bursa Reddit. We all remember Wall Street Bets. And more importantly, our audience today, consultants. How do you prepare for it? And I think the first thing, Nudge talked around it, auto CIO, opportunity or threat. Auto CIO is the first part. The other piece of the pie is actually distribution. For those of you that know me, I was a board member of MACL and was the MD of the owning company. And I actually was a board member of FIMM at one stage. But I always used to say distribution is king. Manufacturing is manufacturing. So you look at it. When I look at our market, as of August, funds under management by the local fund management, some 279 billion. Total market cap's probably running about 1.7 trillion. So it's not small. It is some 15% of our market cap. Now, I think the key thing for all of us in the industry to start thinking about is what does the future hold? And what the future holds is distribution. If I could pose a question to our audience today, do you know the share of wallet that you have of your clients, of your investors? And how is it distributed? Is it sitting with yourself? I'm sure they have properties. We know fixed deposits have been growing month on month, despite through COVID. We've seen an influx of funds into the share market. But I think so. There's a share of wallet question, and then there's a more important fundamental question: disintermediation and compensation. Now, I'm talking about how we earn our money as consultants. I believe what we're going to see is, there is a push for fee for service. There's no doubt about it. This is something we really need to start thinking about. So, as a consultant, you're tied to a house. Now, your clients will now be maybe asking for cryptos. They may be asking for different product classes, some of which your manufacturer can service, and there are other things they cannot service. So are you going to, as consultants, do you pivot into fee for service? Because it is coming. It's a theme through the whole industry worldwide. We're seeing the push for lower fees and lower commission rates in insurance, in Takaful. If I draw from my own industry, if I just look at the stock market, remisers were earning 100 bips as management fees. They're now earning 30 bips. That's a lot of difference. However, we are introducing a profit sharing, which Nudge touched on, for remisers as a way to try and broaden their base. But I think the real key for us to look at is, I have a philosophy. What we want is investors to enjoy the private banking experience at a lower cost point, at a lower AUM. Now, how will that be achieved? That's going to be achieved through technology. Now, is that technology going to disintermediate us from the market? Will we lose our contact point with our investors? I think that's the question we really should be starting to talk about, is how do we pivot and how do we ensure that we are relevant to our investor base? Now, as we stratify, and we look at our retail investor base and we stratify it, we look at how people invest, what their behavior is. We also look at their age demographics as well to see what's their risk appetite. And it's quite clear, younger investors who will be our future investors have a very high risk appetite. Yet, We also know that investors want no risk and high return. So there's a certain gamification that we're seeing in the investing space that we need to acknowledge and be understanding. Then so you have, as a theme, you have gamification. There's another thing, ESG and SRI. Now, the question then to ask is, will your investors trade off, and this is a manufacturer's question rather than a consultant's question at this point in time, will your investors trade off long-term sustainable profits, or do they think they can outperform the market by swapping funds? So they go North Asia one week, they go Southeast Asia the next week, and then come back to Malaysia. And because one would think on the platform, your preferred investors can swap funds at minimal cost or no cost. Bearing in mind we work so hard to capture our investors that they will try and look to maximize their outcome rather than being set and forget. But there's another group of investors who set and forget. Now, drawing on my previous experience, what we saw, our largest investors would actually often go online, and we'd see them looking for investment reports, and they would actually rebalance their portfolio themselves rather than relying on their consultant. So there's a whole degree of empowerment. Now, this degree of empowerment is going to continue. And so the interesting thing will then be, looking at what Nigel was talking about with Auto CIO, is Auto CIO, then empowerment tools will come. Now, how do we ensure that we are creating value so our investors stay with us? And that's the real key. And that gets back to the point that Nigel was making about upskilling, understanding product. And that gets back to my other point about share of wallet. I am very focused on share of wallet. One of the key things we're looking at the exchange is where are investors putting their funds. Now, there's so many different investment choices: venture cap, P2P, longer term investments. We have property, of course, and the traditional bonds. Now, as manufacturers bring out new products, I envisage there will be a period going future, and you will have seen the exciting products that are often offered to private investors. I foresee this being offered on platforms to mass affluent customers. So you're going to actually see a whole, that level of service using a little bit of AI, using technology. We're going to delight the investor, because by delight, the investor demands to be delighted. They want timely advice. They want interesting advice. They want you to anticipate their need. I envisage that once I can see a future state where we know what people like to buy, and we will give them analysts of companies that reflect their interest. And that will be the role of the fund manager, to provide that advice, provide that analysis, which is then, if you like, it's very targeted. So would you be interested in this company? Or it is more subtle. But I think we really are, to remain relevant, we need to skill up, and it will be a fee-for-service future. And so I do envisage a future where consultants will be selling more than just unit trusts. They should be selling insurance, they should be selling advice. And in fact, you may see a consolidation of, bearing in mind the respective professional bodies. But I envisage, if we look at the Australian experience, large consultant or fund management practices pivoted into life insurance, general insurance, accounting, and into providing legal services for their investors, because you moved to a fee-for-service environment. So you couldn't earn fees from AUM. There was no more trail, and there was certainly no more commission.
Okay. Thank you, Dato. So I think that's been really, really very insightful. And I think what you have brought up is, what does the future hold? I think the modalities are starting to change, right? And we need to be, from what I hear, we need to be very open to the various modalities that are emerging, because the modalities are the one, when we talk about being relevant, The modalities are the one that are responding as to what's being offered, how it's being delivered, what investors want. So you can, like, I think the very traditional modality that we have been experiencing that has also driven, you know, the growth of the industry has been the very traditional face-to-face, right? And it has also, but there is now, like what we have seen, like during the last 2 years, is like there came to a case where it became very much execution oriented. I can execute, I'm empowered, I know what I'm looking for, I know how to use technology, and I'm just going to go towards execution, to an execution mode. On the other hand, there's also a hybrid mode that's emerging, that was referenced in terms of, I would like to do an execution mode, but I still want someone to give me the advice because I don't have time to monitor. And we are in an environment of what the Securities Commission calls a multi-layer market. There's so many different kinds of investment options on various kinds of platforms, like what you talked about, ECF, P2P. That's a lot to take in for an average investor to be able to monitor that and to see how that fits in with their long-term goals or retirement planning. So as a result of that, there is a huge need as well to add value, to bring it all together. So the investor at the end of the day can make a very informed decision that fits in with the retirement planning and the investment goals. So, so those are very critical points, and I think we need to be responsive that changes are happening and we need to adapt. So based on that, just now I also want to mention we've got some questions that are already coming in. And if there are more questions coming in, I think this is an excellent opportunity to tap in. Just to move away from the product innovation at large, this is a question, and perhaps I would pass it to you. It's about upskilling, reskilling. I'm not sure what it is, but there is a need for capacity building, right? In terms of those who are connecting products to investors. So the question is, in what areas should they technically be upskilling or bringing themselves to the level where Dr. Umar talked about adding value, you know, pivoting towards adding value? Do you have some thoughts in this area? And do you think it's an area that, you know, it should form part of a curriculum that whoever comes into the industry, it is incumbent on them to be aware of digitization and also to talk about how the whole platform and digitization and technology can be both an enabler and a facilitator, not only towards products, but even to their own, the way their services are being provided. Do you have any thoughts on that?
Yeah, sure. I mean, I think I'll just touch on two things. One is, let's look at how we get, you know, UTC or professionals, you know, coming to our industry. You know, we start from there. I think currently the minimum, you know, there is a minimum requirements. You know, I'm not sure whether it's still SPM or diploma, but you have to pass the CUTE exam. So I think we need to look at the CUTE exam, whether the CUTE exam that's been designed, you know, be able to prepare our professionals into this industry. I think I guess the curriculum or topic on sustainability and ESG, I think is still not there. I'm not sure about, I don't think alternative assets probably not there yet. Probably that's something that we need to look at. We go back to, how we prepare people who like to enter into this industry. And then, of course, it's a two-way thing. The federation and the industries need to work together. I think it's timely that we revisit, the curriculum, the content. So that, if we are moving from transaction to advisory, upscaling our, professionals to be more, long-term. So we need to look at both the qualitative aspect and also the quantitative aspects.
Right. Okay, thank you. I think that's very insightful, and perhaps the organizers could take note as to, what does the future hold for the way that we are setting the competency standards for various distribution channels. There's another question that comes up, and you've actually touched on it, and the thing is, like, the way we are evolving, and we talked about being product centric, we talked about being, just one solution for everyone, and what's the current product to be sold. Do you think that now the time has come for us to actually, to let the UTCs or the distribution channels to really provide, to have the ability to provide on a whole spectrum of products, regardless as to whose products they are? It could be an ESG product or an SRI product, or it could be actually products on other platforms as well. Do you think that the time has now come for us to start thinking about that as a strategy?
Yes, I think the fundamental to this is really, it has to come from the customer perspective. It has to be coming from the client perspective. Yeah, and if we are talking to a high net worth or any individuals, we really need to understand what are they looking for in terms of creating wealth or preserving wealth, or just managing wealth in general. I think if you talk to many people, I just want to make sure that I have my money enough retirement. I have for my retirement. I have for my children. I want to be able to protect my family. So those are basically securities that most people want.
Yeah.
So, and you as an advisor, you need to be able to, equip them. So you cannot just go there just with a unit trust product.
Yeah.
I think
okay, Nach, I just got a reminder. That, we've got 2 minutes left.
Okay.
And I thank you for that point.
Sure.
Dr. Omar, your last, gazing into the crystal ball, what is it that you foretell for the industry? You've got 1 minute to give your insights.
Share a wallet.
Share the wallet.
I think having a single product line is not going to be the future state. More importantly, but more challenging for all of us, all of you in the industry, rather, at this point in time, is you are tied to a manufacturer. That manufacturer will not want you selling other people's product. And therefore, you will have a problem when you want to. So you're going to have to gain the knowledge, to have the requisite requirements to actually give advice, and then provide insurance advice, provide technical advice. But this is the future state, and you need to arm yourselves, dear consultants, because commissions are disclosed now. It will not be long before your investors will be empowered to make their own investments, and you'll see the assets under management that you enjoy today begin to dwindle as they move to lower cost platforms.
Yeah.
Unless you delight your investors.
Thanks. Yeah. So financial wallet, we all want to share of that. How do we add value to it? And Nach, I like to come back to your earlier point. Information is king. Whoever has the data is king, right? And so anything, one more point from you on the Sharia space.
Sharia space, the great thing is Sharia has been refreshed because of the conversation around ESG and sustainability.
Right.
Yeah.
So watch that
Sharia 2.0.
Yeah. Okay. Sharia 2.0. That's the future of it. So I think with that, unfortunately, we don't have more time. I think we wanted to discuss a lot more, right? So that's the thing about the future, it's unlimited. The potential is unlimited, and there's so many things that are happening. And I think the other one is also retirement planning, right? The generation of millennial investors who are coming on today, whilst tax savvy, and they're going to comprise, if they're not already, the future high net worth investors. So their demand for products and services and delivery channels, there's going to be a huge impact on that as well. So they will move from the growth phase onto an accumulation phase and maybe decumulation. So that's going to also dictate a lot as to how the future is going to change, technology and platforms and all that notwithstanding. So on that note, I really want to thank you, Encik Najmuddin, for sharing your thoughts. I think you had such a broad spectrum of thoughts today, from innovation to AI to data to upskilling, a lot of points. And you also shared a little bit as to how you yourself, you are inventing, reinventing, reshaping as to how you want to, you're progressing forward.
Sorry,
And
I forgot to mention social finance and
social
wakaf.
finance.
I forgot about wakaf.
Oh, wakaf, yes.
Yes.
Exactly, yes.
Yes. Yes. I mean, we've done it. It's wonderful. You know, customers get their returns. At the same time, we're making impact. People, like I was sharing with Dato' that, you know, the wakaf, you know, actually benefited people who's building sampan and perahu in ships, you know, in the East Coast, dialysis centers, you know. So we don't have to depend on the government anymore. You know, this social finance, you know, this inclusivity, you know, this is another, I guess, subset of this whole SRI.
Okay. And on that note, Dr. Umar, thank you also for sharing your points of view. I think you brought a lot of perspective because you yourself are going through it, you know, in the way the stock market itself needs to evolve as well. So the point here is, it's not only the different segments of the capital market, it is the capital market entirely that needs to adapt and be agile and respond to meet the needs of every stakeholder, right? So with that, thank you so much to the panel, and Ibrahim, I'll pass it over to you. Thank you.
Thank you.
Thank you, Jasper. Thank you, Dato'. Take care.
Thank you again for Jasper Kaur for moderating that panel. Of course, a lot have been shared, particularly on the elements of what the future holds. And of course, again, thanks to Naj, thanks to Dato' Umar for such a delightful conversation. We now move on to the moment that most of us have been waiting for throughout the day, which is the pop quiz session. Of course, the games where you can actually win prizes. Allow me to toss this over to my colleague Hannah for organizing this pop quiz. Hannah, over to you.
Thanks, Ibrahim, and welcome everyone to the first ever FIMMAC Games. Now, most of you who are regulars here at FIMMAC know that by this time during the conference, we'd be winding down with a little session of lucky draw. However, this time around, we figured, why not play a few more games so that more of us have an opportunity to win some prizes? So the two activities that we will be playing today are the pop quiz as well as the Champions League game. The Champions League game can only be played by those who are already qualified via our qualifying rounds. And by now, you would have received an email from us, which gives you the PIN code to access the Champions League. So click on that, follow that PIN code, and just wait for us in the arena because the games will begin soon. But before that, we will be playing the pop quiz, which is open to everyone who is not qualified to play in the Champions League. So if you want to join us in the pop quiz, all you have to do is go to the website kahoot.it, that's kahoot.it, and click on and enter the pin that we will be sending you shortly. But before we play either of those games, I just want to give you a gentle reminder that tomorrow we will be hosting a lucky draw. In order to join us for the lucky draw and be eligible to win one of 2 iPads, all you have to do is click on the little games icon here on our event platform. I think it's somewhere over there. Click on games, scroll on down to lucky draw, and you'll find a link to a little quiz sheet. Click on that quiz sheet, get all 10 answers correct, and submit it to us within the deadline. If you do that, you may be eligible to be one of the lucky people to take home a new iPad. So going back on to our pop quiz, we're going to be playing it on Kahoot in a while. So quickly go to Kahoot, wait for our ID, and then start keying it in to be one of the players. The 2 top scorers of our pop quiz will take home a new smartwatch. But please be reminded, if you are already playing in our Champions League, you may not play in the pop quiz as well. If we find that you are playing in both, then your prize will be automatically forfeited to the next eligible person. So kasi chan la, everyone wants to win, right? That being said, I think I've rambled on long enough. So without further ado, let the games begin.
Mr. Ibrahim, let's get ready already.
Congrats to Lim 123, JD, and Daryl. And for those that are unlucky, there's always tomorrow and the next 4 days or 3 days to come. So don't worry about or don't fret about that. But for now, we have to adjourn for today. We'll see you same time tomorrow at 9 o'clock for our day 2 of FIMMAC 2021. Thank you for coming, and I hope you had a good time. See you tomorrow.